It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Treasury Secretary Scott Bessent says the U.S. continues to have a strong dollar policy under President Trump. In an interview wrapped up minutes ago here on Bloomberg, Bessent said, quote, the strong dollar policy is completely intact with President Trump, adding we want the dollar to be strong. What we don't want is other countries to weaken their currencies to manipulate their trade. U.S. stocks trading mixed right now, edging up, though, ahead of Amazon's results after the close of trading, and of course the jobs report tomorrow morning, 8:30 a.m. Wall Street time. Here's where we stand with the Dow down 204, now down 0.5%. S&P little changed, up 9, up just under 0.2%, while the Nasdaq Composite Index is higher by 55, up by about 0.3%. A retreat for the Russell 2000 Index, down 0.3%, with the 10-year at 4.42%, the 2-year 4.19%. Spot gold now down $16 the ounce at $28.50, down 0.6%. West Texas Intermediate crude down 0.8%, $70.48 a barrel. Yum Brand shares are having their biggest gain in almost 5 years after sales surpassed expectations, boosted by growth at the Taco Bell chain. Right now, we do have Yum Brands up by about 8.5%. Also reporting earnings this morning, Hilton Worldwide, the hotel chain, now up by 4.9%. It reported fourth quarter earnings that beat expectations. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Charlie mentioning some of the headlines we got out of that interview between Bloomberg's Leah Mosin and Treasury Secretary Scott Bessent that we just listened to live here on Bloomberg TV and radio. In addition to talking about the dollar, we learned a few other things, including that he's met with the chair of the Federal Reserve, Jerome Powell. He's not, though, interested in commenting on monetary policy or, for that matter, concerned about whether the Fed is going to cut or not. They're looking at other ways to bring rates lower, a lot of that having to do with fiscal policy and cutting government spending. On that note, he also addressed the Department of Government Efficiency and the access they have been given to the Treasury payment systems. The Treasury Secretary saying that DOGE will not be allowed to change the Treasury system. It has absolutely had no power to do so, and that people should not be concerned about Treasury payments being made. He also was asked about tax policy, and he said the most important thing for economic predictability is to make the 2017 tax cuts permanent. That, of course, is something that Congress is working on, although it's not clear how exactly or when that is going to happen and what all could go into this ultimate tax package. As Axios is now reporting that at a meeting at the White House today between the president and House Republican leaders and members, he talked about some of his other campaign promises too. No tax on tips, on overtime, on Social Security. It's a lot to get done. And again, the question is how, as there's growing impatience in Congress for this budget reconciliation process to really get started. As we heard on Balance of Power yesterday from Republican Congressman Byron Donalds of Florida. Here was his take.
When it comes to tax policy, most of the Tax Cut and Jobs Act is not new policy that we got to work our way through. We are extending most of that policy and having new conversations on no tax on tips, no tax on overtime, no tax on Social Security, the ECCA, and some other new tax pieces that we're going to have to figure out. But the political lift is not in explaining the policies, it's moving it through the two chambers. In my view, two bills is the way to go at this point.
2 bills is the way to go, he says. That's not what House leadership has been advocating for. One big beautiful bill is the preference of the House, although the Senate does like that 2-bill strategy. And the Senate Budget Chair, Lindsey Graham, is saying he's going to move ahead on that next week. So the clock is ticking for House leadership. And we want to go now live to the House. Joining me from Capitol Hill is another voice to add to this conversation. Republican Congressman Mike Flood of Nebraska is joining us here on Bloomberg TV and radio. He is the vice chair of the Main Street Caucus. Congressman, welcome back. It's always great to have you. Can you just tell it like it is as you understand it now? Is there a one-bill plan that is looking like it is making progress forward?
Well, we've said for a long time, most of us in the House have said one bill makes sense. Listen, we've got to get everybody on the same page. The more bills you have, the more uncertainty you interject into this whole process. You know, we're talking about tax cuts, border, energy independence, and spending cuts. Out of those four things, there's a million things that could go wrong in each one of the four policy objectives. I think the only way to go forward, like the president has said, like our speaker has said, like our appropriations chair has said, one big bill. And you know what? Quite frankly, it's frustrating that we can't land on an answer. Even if it was two bills, somebody make the call and go forward. We can't be messing around with this. In my opinion, it should be one bill. That's where House leadership has been. That's where Jason Smith, the chairman of the Ways and Means Committee, has been. And I'm hopeful that we get there. But I'll tell you, the way it is right now, and I was on the phone last night with House leadership, some members of House leadership, they were still working at 11:30 back and forth trying to figure out how they could make this meeting at the White House very productive today. And I actually think they made some good progress last night in the Speaker's office. I really credit folks like Mike Johnson and Chip Roy. They are working this out, trying to get to yes, and I'm confident we'll get there. It's always messy, but democracy is messy, and our process is messy, but the result will be good.
So who is most contributing to the mess right now, Congressman? Is it the hardline conservatives in your conference who are pushing for steeper spending cuts, or is it antsy senators like Senator Lindsey Graham who are trying to get ahead of your chamber's work?
You know, in my opinion, the House of Representatives wants deeper spending cuts than maybe the Senate does right now. That's just me reading the situation. I'm interested in spending cuts that change the trajectory of our $36 trillion deficit. I want to see big things done because I want to put this whole crisis with our debt behind us. Not everybody has the same interest there. So from where I sit, it's not whether we extend the tax cuts or the border or energy independence. Everything we're talking about now really concerns how deep do we cut, what do we cut, and how does it look, and how do we explain it to the American people?
Well, so can you shed a little more light on what the discussion is around what and how deep will be cut, considering it does seem that there isn't much appetite to cut mandatory spending, and yet if you're trying to get spending cuts of the size that some of your colleagues want, you might have to tap into somewhere.
Well, absolutely. We do have to tap into mandatory spending. That said, in reconciliation, you can't touch Social Security. The president has said he does not want to see any cuts to the benefits delivered to patients for Medicare, and I'm now hearing Medicaid. However, there are things that we can do. There are provider taxes that are paid by healthcare providers, and then they get a rebate back on that. That's not a fee for service. There's different types of funding for social safety net programs. There's things that we don't think work very well that have been funded for years. There's also student loans, and should we put a cap on some of those things? There's a variety of ways to cut. You'll see a menu of options that will come out in March, and it will be littered with a collection of ideas, some of which Americans are going to really not be for. But hey, if we don't sacrifice, if we don't understand that this is going to be a painful process, nothing's going to change. And I guess my message to the American people is we as a nation, as Americans, have to recognize that this is such a big problem, our debt, that we're going to have to say no to some programs that we like, but we simply can't afford. And it's easier said than done. I'm ready to go there. I've been preparing my constituents for such a thing. We need the buy-in of the American people to say, you know what, this is short-term pain for long-term national security, not living under this crippling $36 trillion debt.
Well, and we know the debt reduction efforts aren't just within your chamber or Congress. It's also actively underway at the Department of Government Efficiency through the efforts of Elon Musk. And already we're seeing movement there and through executive orders as well. Is any of this front-running the ability to get these spending cuts on paper in the reconciliation process, though, Congressman? How does this all fit together?
Well, I think there are some things that DOJ can tell us about that we can do in the reconciliation. Others will be executive branch options. I'm glad of your reporting today. I had the same conversation with our Treasury Secretary on Monday night. I asked him, does Elon Musk or DOJ have direct access to the federal payment system? He said no. They have a read-only access of past expenditures. That's no different than a state auditor having access to all the expenditures in a state budget. I don't see why that is so alarming. but I did make clear to the Treasury Secretary that we're counting on him to do a good job. We're counting on him to protect Americans' private information. And I also told him that at the end of the day, Article 1 of the U.S. Constitution gives Congress the power of the purse. And ultimately, if these things are going to get solved, it has to go through Congress.
Well, and Congress also, of course, has oversight responsibility. Should Elon Musk be added to that? Does he need to come testify in Congress as to what exactly Doge is doing, have some form of the legislative branch holding him accountable?
Well, I'll tell you what, right now he's acting at the behest of the president who just won a national election on this very issue of cutting government spending. I also understand that Elon Musk can't make any changes to the federal payment system, so he's in a read-only capacity. People are going to react to whatever he puts on his platform called X. But ultimately, and I've heard this from the president, I've heard this from the president's people, there's only one person that speaks for this administration, and that is President Trump himself. And President Trump has said there are things we are going to agree on with Elon, there's things we might not do. I think there's an appropriate level of oversight. Again, Elon is only entitled to a read-only version of federal expenditures. That's not crippling democracy in any way. That's finding out what's been going on with this huge bureaucracy. And quite frankly, a lot of the folks that I represent are like, finally, someone's looking into this. And I'm excited about where we can go as a member of Congress. I want to compliment what Doge is doing by making those cuts permanent.
Well, Congressman, I'd like to ask you about what else your branch is going to have to achieve in the not-so-distant future here. We've obviously begun our conversation on reconciliation, but there are still funding measures that need to somehow get passed, if not another continuing resolution by mid-next month, a debt ceiling deadline that is going to be looming as we get closer and closer to the X date with each passing day. How do those things get done? And frankly, are you able to do it alone as Republicans, or do you need Democratic support?
Well, I'm one of 435, but I think we should put the debt ceiling conversation and the policy in our reconciliation package and get that passed if we can do it in a timely manner. You know, we've got to deal with government funding expiration on March 14th. One of the things I want to see us implement our 2024 budget priorities. We should not be living under a budget that was signed by Joe Biden. It was also authored by Senate Democrats with House Republicans. I want a 2024 budget that's put in place until we get to our 2025 budget that has our priorities in it, our focus. I don't want another simple continuing resolution just to kick the can down the table. And if I were an appropriator, I would think that would be a slap in the face. They spent all last year putting a budget together, and we're going to simply just do a kick the can down the hill maneuver with another continuing resolution. Listen, we're here to govern. We've put the time in. Let's make that our funding policy for 2024 and get that done.
Well, as you allude to kicking the can, though, at least in most recent history, that can can't be kicked without Democratic feet also taking part in the can kicking. It has had to be a bipartisan initiative, Congressman. And based on the kind of temperature in the House right now and how displeased Democrats seem to be with some of what has gone on in the last few weeks, are you confident that those votes will still be provided to make up for Republicans who very well might not vote for some of these policies that we're talking about here?
Well, you know, we're talking about continuing budget funding. This isn't a vote on reconciliation. I know that Tom Cole, our appropriations chairman, talks with his counterparts on a bipartisan basis in the Senate and certainly here in the House. Appropriators have their own language. They know how to work through these funding issues. They've done this for years and years and years. I'm confident that we can work on a bipartisan basis. Listen, outside of reconciliation, if we're going to make any progress the next 2 years, we're going to have to work with 53 senators and 7 Democrats at a minimum to make the government run. And so that should come as no surprise. We can achieve that. We've done it before. It will require some compromise. But you know what? I've voted for those continuing resolutions. I've been a part of the bipartisan effort to put them together. As the vice chair of the Main Street Caucus, you know, almost 85 members strong, we are the ones that come to work every day, that make sure that America is open for business, that our bills are paid, and that we are responsibly governing. And I can tell you, we will get past March 14th. The government will be funded. We'll figure out our plan on the debt service, or the debt limit. And ultimately, we're going to have to find some way forward with the Senate and maybe even some members of the House. Democrats.
All right. Well, we'll leave it on that note. Republican Congressman Mike Flood of Nebraska joining me live from Capitol Hill today. Thank you so much, helping us work through a lot of these fiscal conversations, which of course is a conversation that also took place with the Treasury Secretary, Scott Bessent, as he talks about taxes and the strong dollar and what access DOGE really has at the department. We'll have more analysis of that conversation in the late edition of Balance of Power coming up at 5 p.m. Eastern Time. In the meantime, Bloomberg Business Week is straight ahead right here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Feels like a Friday, but it tain't. But it is Friday's Eve. And a very good afternoon, everybody. It is Thursday, February, what is it, 6th?
I think so.
2025.
Yeah, that last check.
Had to squint a little bit to see the date. Very good afternoon. Carol Master along with Tim Stenivek live on radio, TV, YouTube, Bloomberg Originals. It does feel like a little bit of a wait and see moment. Today, we had a mixed bag of earnings, kind of an equal number of stocks in the S&P are up, equal number down. So, well, we're in the trade.
Dow's in the red, S&P 500 and the NASDAQ are in the green. We're going to have more details from Charlie Pellet in just a minute. Carol.
Yeah.
What's going on at the U.S. Treasury?
Gotta say, if you read in among the Bloomberg stories, some are saying that, Elon, you're kind of annoying us. At least some of the folks at the U.S. Treasury seem to say that, and maybe over in the U.S. Senate. We're going to explain. We're also going to hear from the new Secretary of the U.S. Treasury, Scott Bessent. He addresses that. That's coming up a little bit later on.
Also, a little bit later on, we're getting Amazon earnings. We're going to talk all about what you need to know about the second to last of the Mag 7 to report.
Yep, and then as we've been teasing all along, we've got a big U.S. eco read tomorrow. Why tomorrow's jobs report includes a reality check on the past year, some adjustment there. But is it a big deal? We'll dig into that.
Also, Hilton shares soaring to a record. CFO Kevin Jacobs is going to join us, give us an idea of growth behind the business.
Yeah, so we got a lot of everything going on today, but let's get you going with a look at the trade on this Thursday. Here is Charlie Pellet.
Hi, thank you very much. Here's what's going on. We've got Dow Jones Industrial Average retreating. S&P, NASDAQ, they are both higher right now, right to the numbers, with the S&P up 8, up by 0.1%. All of this ahead of the jobs report tomorrow morning. Amazon after the bell. The Dow slumping 196 points, down 0.4%. And NASDAQ is up 52 for the NASDAQ Composite Index, a gain now of about 0.3%. Bottom line here, note of caution ahead of those earnings out of Amazon and the jobs report, with the 10-year 4.42%. We've got the 2-year 4.19%, and West Texas Intermediate crude trading lower, down 0.8%, 70.47 a barrel. Spot gold 28.52. Gold also lower today, down 0.5%. Bitcoin down almost 1%, holding just above 96,043 on Bitcoin. Philip Morris International among the many companies reporting earnings. It's out with better than expected profit. Philip Morris PM on the ticker up by 10.4%. Also out with earnings, Roblox, a leading video game platform. Right now we've got Roblox down 13.3%. It did report daily active users for the fourth quarter that fell short of analyst estimates. Again, got to underscore, we've got Amazon after the close of trading. Yes, going to be all over that report as it drops. Recapping, S&P up 10, a gain there of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a focal point for investors and the Fed tomorrow morning's monthly jobs report. We'll have that at 8:30 a.m. Wall Street time. The expected upcoming annual January revision to U.S. job growth will be substantial, but probably not as bad as initially estimated, underscoring, Tim, a labor market that is gradually cooling.
With more on what to watch for, we've got a Bloomberg News, Bloomberg Economics U.S. economist Stuart Paul joining us here in the studio, along with Bloomberg's Vince Signorella to connect the dots between the data and the markets. Really pleased to have both of them here in the studio with us. Stuart, I do want to start with you. What is the number expected tomorrow, consensus versus what Bloomberg Economics expects?
For payrolls, we're expecting 215,000 jobs added in January. Consensus is closer to around 170, but if you listen to the whispers on Wall Street, folks are really inching up towards that 200,000 mark. But there were strong economic fundamentals throughout the month. We saw hiring accelerating as reported in PMIs. ADP surprised to the upside also. We also do have to take account of the fact that there was a polar vortex in that lower 48 states, and we also had wildfires in Los Angeles shaving a few thousand jobs off the January report.
So in other words, the job market might be stronger than we think because of those special instances?
Well, so the amount of hiring in January was relatively robust. But if we think about all those revisions that you were mentioning, it's going to lower the base against which we're measuring January payroll growth. As you mentioned, through March of 2024, we're going to get a downward revision. We think of about 700,000 jobs, less than the 818,000 originally estimated. Then we get revisions of the birth-death model through the end of 2024. That's going to shave off, we think, about another 235,000 jobs, bringing total payrolls at the end of 2024 down by about 935,000 jobs. Adding 215,000 in January is great, but it doesn't mean that we're breaching where that high watermark that we thought we had already set.
All right. So, Vince, you watch the ins and outs of the market. I mean, do traders care about these kind of revisions?
They didn't last year for whatever reason.
Might they this year?
They might, and it might be more of a political hint of things than anything else, especially with all the stuff that's going on and rumors with Doge and all this stuff, that maybe things aren't as up and up, if you will. But to Stuart's point, traders are looking for a number closer to 200,000 tomorrow. So I agree with him. I think the asymmetric risk is we see a higher number tomorrow, which is definitely going to probably weigh on Treasury yields and maybe even on equities, at least for the short run.
Vince, how does it contrast to, in weight of importance to I mean, Carol said it feels like Friday because it's been quite a week. But
It's
with the
wishful
tariffs
thinking.
news, where we focused early in the week, that was all anyone could talk about.
Yeah.
What's the distinction there between what traders are focused on, the eco data, what comes out of the White House when it comes to tariffs and trade? How do you make sense of
So
that?
it flipped. I mean, no one cared about jobs when the tariff news was out. When you were looking at 25% tariffs on both Canada and Mexico, 10% going out to China, that was the big deal. When that was on pause, bang, back to economic data, back to earnings.
Right.
That's now the focus. A couple of weeks from now, 3 weeks from now, whenever this pause ends, if we go back to tariffs again, we're going to flip again. It'll be tariff news that weighs. And I'd say what Bessent said today, the market's not picking up on. He basically said China's going to be the ones eating the cost of these tariffs. That means the tariffs on China aren't going anywhere and could possibly be increased. So that may sort of even things out where both data and tariffs come back into the picture.
Do you agree, Stuart, that China is going to be the ones eating the tariffs?
I think when it comes to prices, I do expect China to eat a large chunk of the tariffs. There are too many margins along which prices can adjust before consumer goods get to the shelves.
So they, in
for
other words,
consumers to
reduce prices
inflation.
ahead of the tariff.
So China can lower their prices as they're heading out of the ports. You can end up seeing further dollar appreciation that helps to offset the effect of tariffs when it comes to consumer prices. When you look within the federal government data and you look at corporate profits, at least in the aggregate, there is room for compression there. So there are all these margins, again, against which prices can adjust before goods get to the shelves for consumers. So who's going to end up feeling the pain? Probably China a bit more than U.S. consumers for that specific set of goods.
So you're saying like a manufacturer who manufactures over in China, even though it might be an American company, the manufacturer in China is going to say, we're going to cut your costs. So we're going to eat some of that over there. So that once the tariff is put on, the American consumer doesn't feel
You
the
have
price hike.
manufacturers, you have importers, you have wholesalers, and then
So-
you have retailers. All along that chain, you have room for compression before consumers feel the pain.
Vince, what is it like, though, like in this environment? Like, we've seen Donald Trump in the White House before. It does feel a little bit different. But there is a lot coming at investors and trying to figure out what's the sticky stuff, what's the stuff that really sticks around. Is it tariffs? Is it tax cuts? Is it, I don't know, or is it, like, what is it?
So
Like, how do you make sense here?
I think we have to think the tariffs are going to be here. He ran on tariffs. He's thinking about putting across-the-board tariffs, which nobody is talking about, of 2.5% or higher. It's in the background. He's not even brought it up too much, but it is in the conversation in the White House that 2.5% to maybe 5% tariffs could come out across the board on every product. We're not seeing that yet. That may not come forward, but they're talking in the White House, and it's not practical. But they're thinking in the White House that they can use tariffs to either reduce or eliminate the income tax. Now, the U.S. consumer would obviously love that. We'll pay for, you don't pay a tax unless you buy something. Probably, I mean, realistically, not going to happen. That it's going to compensate. But I believe they think that they can do some form of tariffs to raise some revenue, along with the cutting of expenses, that they can cut taxes to appease the voter base and to just to promise to deliver on what he promised.
You know, I think about what you just said, Stuart, because as an economist, you know, you have to figure out, again, how long these tariffs stick around, if there's more that are put on. I understand that China can eat some of it, perhaps, but there's got to be ultimately an impact on some U.S. companies, too.
Sure, there are an impact on U.S. companies that
And growth, ultimately, maybe here in the U.S.
And growth, that's right. So the first element that you have to deal with on the growth, when it comes to growth, is that before tariffs are implemented, you have a surge in imports, and that starts to weigh on growth. With the implementation of tariffs on Canada and Mexico delayed until March, again, expect to see as much importing of goods from those two trading partners in advance of announced tariffs or any sort of agreement during the first quarter. So that's going to weigh on growth immediately. Then the growing pains that come with reorienting supply chains does weigh on growth as well. So I'm certainly not dismissing those. As a geopolitical tool, though, in sort of trying to position the U.S. vis-a-vis China, it makes sense that Trump would look to keep those tariffs in place. Where it gets to be a little bit simpler of a relationship, let's say with the U.S. and Canada, it doesn't make as much sense to be as harsh with tariffs on Canada, for example, and because most of the net exports that Canada is sending our way are energy products, and Trump isn't going to want to deal with higher energy prices, especially if that does ripple through to the gas pump.
Hey, Vince, I want to give you the last word on the trade. When you say that the market's not picking up on what you think the president has communicated with regard to tariffs, what exactly do you mean? What do you think? Where do you think prices should be?
Well, I don't think they're taking it seriously, that tariffs are coming. I mean, let's not forget, we already have tariffs in China that he imposed in his first term. They're still on. The Biden administration didn't take them off. So it's not like he's opposed to doing this. I think, you know, what the tariffs and the situation with Canada and Mexico, the thought process on the street was, if I'll slap my friends around, imagine what I could do to you, China and Europe. And let's not forget Europe. Yeah. He really has the hots for putting tariffs on Europe. And they're coming. They will be coming. So I think he's going to let Canada and Mexico off easy with maybe some minor tariffs, just to, you know, just because of the fentanyl situation until that comes under control and immigration. But I think China and Europe are going to pay the price of this, and the UK eventually as well.
All right. Well, we're going to be on tariff watch, that's for sure. All right, guys, thank you so much. Vince Signorella here in studio, global macro strategist at Bloomberg News, and of course our Stuart Paul, U.S. economist at Bloomberg Economics. All right, so that's our economic focus on this Thursday.
Now to one of the Mag 7s that's certainly on our mind today, big time, and that, yes, of course, is Amazon. Shares up around 1% ahead of earnings, which we get just after the bell closes today. Results are set to focus on the cloud and whether the AI investments for AWS are actually finally paying off. It does generate most of the company's profits. That is AWS, of course. Meantime, Carol, CEO Andy Jassy has been on a mission against the company's middle management.
Yeah, a lot going on. It's a big company, as we know. Bloomberg's Spencer Soper covers it all, knows this company inside and out. He's Bloomberg News technology and e-commerce reporter joining us from Seattle. All right, Spencer, first the nitty-gritty. What needs to be top of mind when it comes to Amazon's results today? Is it all about the cloud? Is it all about AWS?
Probably. I mean, we never really know until it hits and we see what folks are reacting to. But yeah, that seems to be what folks are focusing on most, especially when you consider results from Google and Microsoft, and those actually disappointing the market a little bit. So we're watching how their cloud business is doing with all of these investments that they're making and betting on the long-term growth. And then we're also just curious how it's faring in its core e-commerce business in the busy holiday season, and how it's standing up to, stepped up competition from like Walmart, as well as these upstart companies like Temu and Shein.
Well, weren't they, wasn't Amazon, or forgive me if I don't know that they already have done it, but they were starting their own competitor, right? A discount store to kind of fend off Temu. Have they done it? Has it carried out yet?
Yeah, they did it. It was pretty ham-fisted. I don't know that it came out in November. I mean, I don't know how much if it would have affected the this year's holiday sales, if at all. And it seemed like they deliberately throttled it too, because it was distinct from the main Amazon website. You had to deliberately seek it out as a consumer. So it did look like they were not very eager to have too many people stampede over there.
Okay, on the cloud side, this is obviously what investors are going to be watching in addition to what you mentioned when it comes to retail. What's the signal that we should look for to make sure that supply is there for Amazon, but also demand is there for AWS? Because there is this balance when it comes to customers of these hyperscalers. For example, we heard from Microsoft earlier this week, or last week, I should say, and other companies as well. And the challenge that they've had has been, well, there's not necessarily the supply to offer our customers what they demand.
Yeah, and we know Amazon's been investing, very heavily and bullish on this, and so yeah, we want to see if, is the demand there. I haven't heard much from Amazon in terms of not being able to meet it. They're definitely always promoting how quickly they're iterating and offering new services. But yeah, that will be something to consider on this print, as well as just the cloud market in general, if companies are trying to cut costs, the cloud often can still stand out and do well and grow because it can be a way for some companies to cut their costs by investing more in cloud services.
Hey, talk to us about your story about Amazon, their war on getting into and cutting back on the middle. What are you smiling?
Yeah, middle management.
Middle management. Tell us what they're up to and why.
Yeah, so Andy Jassy back in September put out this memo about the main headline was everybody's got to get back to the office 5 days a week beginning in January, and that's underway, and there was backlash around that. But the another very important part of that was he wanted to reduce the ratios of managers to direct employees or something. It was this cryptically worded thing about 15% ratios, and it was just hard to decipher. So we were just trying to see how that's playing out because he gave a deadline for that, the end of this quarter, so the end of March, for that all to play out. And we wanted to see, what the mood was within Amazon and how people were feeling and how these were being carried out. And there's definitely just like an overall sense of out with the old, in with the new. If you're at a higher level within Amazon and been there a long time, it's going to be harder to get a promotion. You might be looking over your shoulder, and then there's still kind of a steady stream of recent college graduates getting put into the mix. So overall, it looks like a general kind of beyond delayering and trying to eliminate some management levels, also just like an overall downshift in the seniority and pay grade of the corporate workforce, which is in line with Jassy's efforts to cut costs.
So Spencer, you say in your story that they're being told to keep hiring from that pool of recent college grads to fill positions while finding reasons to remove more senior workers. So that's actually kind of an initiative, and that they're being told that within the company?
Yeah, well, that's one thing we picked up on was there's actually some blowback. Amazon has these recruiters that are out always, cultivating college graduates and trying to promote Amazon as a good place to be because all of these companies want to recruit the best and brightest. They all have recruiting teams, and then getting blowback from actual teams saying, "Hey, why are you sending me these college kids? When we're trying to shed bodies in here, and some tension around that, and saying, well, look, the mandate's from the on high that we got to keep hiring these kids, so bring it up with them." That was it's certainly happening.
Well, and as you say, that he's on trend, that he's not alone, or Amazon not alone necessarily, maybe throughout corporate America on doing that. Hey, Spencer, really appreciate it. Looking forward to Amazon after the close. Spencer Soper, Bloomberg News technology and e-commerce reporter. Coming up next, the shock and awe of Elon in the U.S. government, and who may not be so happy. It's our most read story in the Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Treasury Secretary Scott Bessent says the U.S. continues to have a strong dollar policy under President Trump. The Treasury Secretary also says he expects a lower path for 10-year yields under the Trump administration. And in an interview that was aired on Bloomberg television and radio, he also said he will not criticize Fed Chair Jay Powell and trust him to make the right decisions on monetary policy. The Dow lower by 179 points, dropped there of 0.4%. S&P ahead of Amazon after the bell and ahead of the jobs report. Little change right now, up 9, up by about 0.1%. And we have got NASDAQ up 58 for the NASDAQ Composite Index. That is a gain of 0.3%. 10-year 4.43% with the 2-year currently yielding 4.20%. Gold down $15 the ounce, 28.51 down 0.5%. West Texas Intermediate crude down 0.6%, 70.62 for a barrel of WTI. Yum Brand shares are now up by 8.6%. They're having their biggest gain in almost 5 years after sales surpassed expectations, lifted by growth at the Taco Bell fast food chain. Right now, Yum Brand's up by 8.64%. Amazon will be the big earnings event after the close of trading. It is expected to report that revenue grew 10% in the fourth quarter. Ahead of earnings now, we do have Amazon advancing by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, let's get to our latest on Elon and his work there at the U.S. government. The Washington Post, we do want to point out, reports that representatives from Elon Musk's Doge have fed sensitive data from across the education department into AI software to probe the agency's programs and spending. This is according to 2 people with knowledge of the Doge team's actions. Again, this is coming from the Washington Post. All of this coming on the back of Elon Musk's efforts into the U.S. Treasury, which came to light this past week. We've been talking about it a lot here at Bloomberg. And it brings us to what is the most read story on the Bloomberg today, about how Elon and his efficiency team, who have gained access to the Treasury Department's computer network, have caused alarm and sparked a standoff between bureaucrats and President Trump's administration. With more, we welcome in Ted Mann. He's Bloomberg News money and influence reporter. He's out there in our D.C. bureau. Ted, a lot of places to go, and we know we heard from the U.S. Treasury Secretary on that. We'll get to that in a moment, but give us an update in terms of the work that Elon Musk and the Doge team have been doing specifically at the Treasury, the type of back and forth we've been seeing.
Well, thanks for having me. The work that they're doing is primarily focused on the information systems that flow through the Treasury. That's information on all the payments that the U.S. government makes, all the identifications of programs and individuals and all of the stores of information that are contained inside that agency. The fact that this team of relative unknowns were able to so quickly get access to that information alarmed members of both parties in Congress, even Republicans. We reported this morning that 5 or 6 Republican senators have privately lodged objections to the White House when that became clear. Because it's really unprecedented to have relative newcomers crawling through the very most secret forms of information contained within the Treasury Department.
What did the GOP senators take issue with, according to your reporting?
The best that we have been able to understand is that there was a feeling that this was a little bit too Big Brother-ish. That's how one person put it, that this is going deep into personally identifiable information. There was, in some of the early reporting, this sense that the government, that these staffers were really getting a very up-close and personal view of what individual information was within the Treasury Department, and they were lodging objection to that, saying that it was, the sort of thing that bothered them as being overly invasive and really uncontrolled. We don't really have any sort of precedent for this kind of behavior.
Who is on the Doge team? And we're going to hear a little bit later on this hour, in about 20 minutes time or so, the Treasury Secretary addressing some of those officials. But what do we know about who is the Doge team? And their qualifications.
In terms of the people at Treasury, one thing that we reported this morning, which the Secretary confirmed later on in his Bloomberg interview, is Tom Kraus, who's one of those DOGE officials and is now at Treasury, is someone that Scott Bessent interviewed in December when he was putting together his team, and that in that conversation they discussed this very level of perusal of the forms and systems within the Treasury Department that is now underway. And what that shows is that while you have Republicans on the Hill being a little unnerved, not having expected this to happen, Scott Bessent himself is much more on board with this than a lot of people may have previously assumed. I'm curious
what, we've learned quite a bit from Scott Bessent, thanks to Saleha Mosen's interview with him a little earlier today. He did say that he personally vetted Treasury employees and that they only have read-only access to federal payment data, and there's been no tinkering with the department's payment systems. Does your reporting align with that? Yeah, that's been the biggest question, and certainly on the Democratic side of the aisle, there was great alarm at this notion that they were getting in there in these systems and potentially altering code, doing things that went beyond simply looking at this information, which is unusual enough, but actually changing what was in there. So this is the first time we've had the Treasury Secretary saying, no, that was not occurring. They had previously sent a letter to the Hill in response to some lawmakers, including Senator Ron Wyden, but even the letter itself seemed to say that they didn't currently have anything that went beyond read-only access. What Bessent said today was that no, they had not changed anything or tinkered with those systems about how money flows.
Hey, Ted, my understanding, too, is a federal judge temporarily limited access to the Treasury payment system. A group of unions accused the agency of illegally sharing members' information with Musk's team. And this is that order that allows only read-only access to those two Musk associates, including Kraus. What's interesting is it does sound like the legal system is kicking in. So who, in general, are bringing suits and might bring more suits to kind of maybe prevent Elon Musk and his team, the DOGE team, from doing more at Treasury?
Well, in particular, I think you're going to see legal efforts that originate with organized labor, because to the extent that DOGE has sort of signaled its ultimate intentions, one of them clearly is to reduce the number of federal employees. And so the unions who defend those workers' rights are starting to agitate, essentially to slow this effort down until they can understand what's going on. And that is the most likely initial wave, I think, of legal action.
I'm curious. I'm wondering about the potential conflicts of interest here and the concerns about somebody such as Elon Musk with varied business interests competing with companies such as Boeing, companies that are internet service providers, with Starlink, of course, competing against other NASA contractors with SpaceX. What type of data, even if it's read-only, he could have access to that has folks concerned?
Sure. Sources we've talked to, including former members of the Trump administration first time around and other officials, have pointed to exactly that. If you were a businessman with the breadth of interests that Musk has, and you had unfettered access to all of the information in the United States Treasury about your competitors' finances, about payments and payment schedules of the U.S. government to them for the contracts that they hold, we don't know to what extent they have or plan to or will look into tax data. You might want to know a lot more about the taxes of your biggest rivals, the other EV manufacturers. All of that is on the table. And since we've been told that Musk himself will be the one deciding if he has a conflict of interest in what he's up to, the government and the press and the public don't have a lot of assurances that he's not looking at these stores of information as a way to improve his business propositions.
And that's the important distinction, this conflict of interest or potential conflict of interest, right, Ted? I mean, Musk is classified as this special government employee. This temporary designation limits his term of service 130 days out of the year. He doesn't have to provide those financial disclosures and other ethics requirements. So the classification is there because other administrations have brought in outside help, maybe just for a short-term period. The difference is, many would argue, is that you're bringing in a CEO of a publicly held company and companies that, in particular SpaceX, have billions of dollars in government contracts with the United States.
That's right. It's the definition of a conflict of interest to be in the position that he is in right now with continued personal involvement in for-profit companies that do business with the government that he's helping to advise. And advise seems a little like he's going much farther than advising, it seems like to us from what little they've said. So yeah, this is an unprecedented situation for someone to have the financial interest he has in his companies while simultaneously dictating the operations of the government.
Ted, we should note there are quite a few supporters of Elon Musk and what he's doing. Look no further than the replies to what he posts on his own social media platform, X. What are you hearing publicly from folks inside and outside the government about, yeah, the government maybe is spending too much money. Maybe there does need to be some controls. Maybe there needs to be some modernization of these systems. What are we hearing there?
I mean, those are all conventional platitudes of American politics. Everyone always says they're for the government spending less money on things they don't like and for the government to be more modern and to operate more efficiently and to spend taxpayer dollars wisely. These are not new sentiments. And certainly he's getting, I think, a lot of support from people who feel like maybe this is the way to alter the government in ways that it has not been shaken up so roughly in the past. So there is support for that. And even some of the Republican lawmakers who have privately been a little leery of some of the ways they've been going about their business over the past couple of weeks are still sticking by Musk personally. No one is registering any objections either to Musk or to Trump with some of these early actions, not on the Republican side. So certainly they are acting as if they have a mandate, and on the Republican side there has not been a lot of nothing really in the way of public resistance to this, only some private concerns.
Ted, after you and the team doing the reporting on this and what's going on at U.S. Treasury and listening to the Treasury Secretary talk with Saleha of Bloomberg's Saleha Mohsin in her interview and what he had to say about the Doge involvement, do you have more questions that, do you feel like that ultimately if the Treasury Secretary said, nope, you can't do that, that would be it? Or do you feel like it's more of a collaborative question where the president might weigh in, or Elon certainly wields a fair amount of power right now?
Taking the secretary at his word, I don't think we really know the answer to that question because we don't know what request for access or abilities to change things might come from Musk or Doge or someone working for him today, tomorrow, or next week. We haven't gotten there yet. We don't know who will have to say no to him. We don't know if they will say no to him. And ultimately, if Musk appeals to President Trump because someone has not given him what he wanted, we don't know what Trump would do. So that is a dynamic that remains unknown, despite what Bessent has said about not allowing them to tinker with the payment system yet. I would also note that in Bessent's interview today with Saleha, what he said was that this Doge operation is a purely operational review, that it's not ideological. And that's just totally contradicted by the things that Musk is saying publicly. He's referred to USAID as a criminal organization, and he's bragged about feeding it into the wood chipper. So these are two different accounts of what they're up to, and we don't really know what the truth is yet.
All right, Ted Mann, thank you so much. Bloomberg News Money and influence reporter joining us from our Bloomberg News Bureau in Washington, D.C. All right, when we come back, we shift gears a little bit. Hilton shares rallying to a record following earnings. We're going to talk with the CFO, Kevin Jacobs, stopping by with an update. That's next on Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower right now. Bottom line, though, there is a sense of caution ahead of Amazon earnings after the bell and the jobs report tomorrow morning. But right now, losses. The S&P down 0.1%. S&P 500 index lower by 6 points. We've got the Dow very close to session lows now, down 277, down 0.6%. And NASDAQ down 8, little changed on the day. The 10-year 4.43%, the 2-year 4.20%. Gold down $16 the ounce, $28.50, down 0.6%. And West Texas Intermediate crude now at $70.51 a barrel, down 0.7%. Bonds did pair losses as Treasury Secretary Scott Bessent reiterated his view on a lower path for 10-year yields under the Trump administration. Again, the 10-year 4.43%. Earnings news, Peloton Interactive reported profit that surpassed Wall Street expectations. Peloton now up by 9.6%. Also out with earnings this morning, Hilton Worldwide Holdings. It reported fourth quarter earnings that beat expectations. Hilton shares right now up by 4.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. We are watching shares of Hilton Worldwide. The stock rallying to a record intraday. Right now, just under 5%. The hotel company did report fourth quarter earnings. The company's forecast for full year adjusted EPS did miss analyst estimates, but they were encouraged by the outlook for revenue per available room growth. We're talking about RevPAR, as it highlights Hilton's plans to expand into new markets. The news, I should point out, lifting others in the hotel group, including Marriott and Hyatt. Shares of Hilton, by the way, up about 10% year to date. They were up about 35% in 2024.
It's great to have the president and CFO of Hilton joining us. Kevin Jacobs joining us from McLean, Virginia. Kevin, good to have you with us. Talk to us about growth, because you've added 171 properties to your global network. How much more are you planning to do?
Yeah, first of all, Tim and Carol, thanks for having me again. It's great to be on with you. I think how much more is a difficult question to answer. We actually added, almost 100,000 rooms to our system just in 2024, but we signed over 150,000 new rooms into our development pipeline. Our development pipeline is now just about 500,000 rooms, with just about half of those 500,000 rooms under construction. We grew net units 7.3% in 2024, and we gave guidance that we would grow 6 to 7% in 2025, and we think that growth trajectory can continue. So I think there's a great fundamental setup for travel around the world, with a rapidly growing middle class that has shown time and time again that they want to travel, and if people have the ability to travel, they'll travel. So we grow our system in response to travel demand around the world, and in partnership with our owners, our hotel owners and developers, who are allocating their capital to accommodate that growth. And so I don't want to use a lot of hyperbole and say the sky's the limit, but we're very excited about our growth trajectory.
But you want to say the sky's the limit. No.
I do, actually, and I did, so there you go.
Kevin, what I want to ask you, what really, Tim and I both perked up when you said middle class, demand, because we constantly talk about there is no middle class, or the middle class feels strained at this point. We talked with the head of Trivago, and talked about, I think, more higher end travel that's going on. Tell us about that sector of your business, what you are seeing, and what do you mean by middle class? What are the rooms that they are looking for, the types of destinations they are looking for?
Well, the second part first, look, we have a growing luxury business, right? Mm-hmm. Our Waldorf and Conrad brands, continue to do really well. Broadly in luxury lifestyle, half of our signings last year were in that segment. So we serve the upper end really well. But if you think about the addressable market for travel, it's broadly, the middle classes around the world that travel. And we have brands that, starting with Waldorf, but going all the way down to Spark, our premium economy conversion brand. True is our new build, mid-scale brand, and everywhere in between. And so our overarching strategy is we want to accommodate, any traveler anywhere they want to be in the world for any travel need they have, and that goes up and down the spectrum of price points. But it's really, if you think about the addressable market for travel, it is broadly speaking the number of middle-class people on the planet.
Geographically, where are you seeing strength and where are you seeing weakness?
I mean, in terms of growth or fundamentals, or both?
I want to know fundamentals.
I mean, we're not really seeing weakness. You know, our fourth quarter exceeded our expectations. We grew RevPAR, which is our metric for same-store sales, 3.5%. We had 2.7% growth for the year. We're in a situation where capacity additions are relatively constrained. You know, as measured in the U.S., it's about 1%. A little bit harder to track globally, but broadly speaking, you know, call it 1% growth around the world. Demand is probably growing a little bit better than that, 2 or better, so that gives you a little bit of pricing power, and then with inflation, you're able to take some price. And so our guidance for system-wide for the year is 2 to 3%. The U.S. probably at the lower end of that range, China probably at the lower end of that range, and then other parts of the world like Europe, the Middle East, and Asia Pacific ex-China, you know, sort of growing at the higher end of that range, if not higher, mid-single-digit growth.
Hey, Kevin,
so we're really not seeing weakness in fundamentals anywhere in the world.
Interesting. In the U.S., though, specifically, any difference between business versus leisure travel demand and how that's trending and what that might mean for profitability?
Yeah, I mean, quarter over quarter, you know, coming out of COVID, obviously you saw a lot, you know, a little bit of a mix shift, or actually in COVID, like a big mix shift, but then coming out of COVID, a little bit of a mix shift, call it 4 or 5 points of mix of our business to levels of leisure travel that were historically higher than they had been. That's sort of normalizing. It varies quarter over quarter, but all of our segments were strong in the fourth quarter. So leisure transient grew 4% in the fourth quarter, business transient grew 3%, and group business grew 3%. We think that business transient, as it continues to recover, and particularly group, which is on a lag, because, you know, the bigger the group and bigger the meeting, the longer it takes to plan. And so group business tends to be on a lag. And so we think group and business transient will lead the way, with leisure being a little bit softer. But that's not because it's really softening per se, but it's more just kind of tougher comps.
Hey, listen, you also, when you were kind of going through geographies, you mentioned China in particular. We've been wondering, you know, any indication that the domestic hotel bookings, that the weakness that you guys have seen in China last year has ameliorated with some sign of improvement. Any more color you can give us around the business there?
Yeah, I mean, our expectation is that it will grow this year. You mentioned, you know, you're right, the comps are easier, right? We were down about 5% last year. We do think we'll be up a little bit this year. The other thing you're seeing in China that you have to think about in those numbers is, their consumer is a little bit weaker than it's been in the past, but they've now opened up cross-border travel, right? So some of the reason that domestic China is a little bit softer is because you have a portion of Chinese travelers who are going outside of China, which is benefiting our business broadly in Japan and the rest of APAC outside of China.
Everybody's going to Japan. That's the one thing we keep hearing.
Hey, Kevin, we're asking everybody we talk to about how Washington is affecting their business and the transition there. In your view, how has U.S. business sentiment changed since the presidential election? How does that make you think about Hilton's 2025 room price and occupancy outlook in the wake of tariffs, a potential trade war, and just overall sentiment?
Yeah, look, I think start with overall sentiment is generally more positive, right? I mean, I think about for whatever your views are on all these various issues, I think, you know, broadly the expectations for the environment around regulatory issues, taxation, fiscal policy, et cetera, are that it's going to be supportive of economic growth. There are some other things, trade wars and tariffs, tend to be, can be tricky, but I think it's early days to know what's going to happen for all that stuff. And, baked into our guidance that I won't repeat because I said it earlier, is our best thinking on that, which is just, look, we think generally speaking, if you look at survey data, if you talk to customers, if you talk to people that run businesses around the country, I think people are generally more optimistic since the election, and we suspect in the near term that that's going to continue to support fundamentals. What happens, specifically around certain policy decisions, I think, some of them could be headwinds, some of them could be tailwinds, but again, broadly, the fundamental setup in our business with capacity additions in check, demand growth, the picture for demand growth and the prospects for a recession seem pretty low. A little bit of inflation around the world, and then us, continuing to take share, both in terms of accommodating customers and then in terms of our share of the development pipeline. We're nearly 20% of the rooms under construction around the world, and we're only 5% of the in-place supply, so we fight above our weight.
We got to run. So glad we got some time with you. Kevin Jacobs, President and CFO, I should say, of Hilton, joining us on Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week on radio, TV, YouTube, Bloomberg Originals. Well, Scott Bessent, the former hedge fund manager, now U.S. Treasury Secretary for almost 2 weeks, sat down at the Treasury Department with Bloomberg's Saleha Mohsin, Bloomberg News senior Washington correspondent. It was just about 2 hours ago. They talked tariffs, they talked taxes, they talked Elon, they talked about a lot of things. They talked about Jay Powell. Saleha joins us now from our Washington, D.C. bureau. Incredible interview, so many headlines out of it. We've been talking about it since you sat down with him. First up, Saleha, how would you describe the mood and outlook for the new Treasury Secretary?
He looked like he was seeking to reassure markets and exude confidence that he has control of the situation. Today is his 9th day as Treasury Secretary. In those 9 days, there have been protests outside of the building. We have seen a lot of investor anxiety and angst, not just around tariffs, but also just questions around whether the payments systems and the plumbing and pipelines to the U.S. financial system from the Treasury Department, are they safe from the efforts that we're seeing from Musk and his Doge team? And it looked like Bessent was trying to show that I have this under control and reassure that he is aware of everything that's going on and that it is all part of a plan.
Well, let's go to that part of the interview. Here's Saleha Mohsin with U.S. Treasury Secretary Scott Bessent.
These are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year. And this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections. I'm concerned about privacy, and I'm concerned that the system is robust and customer service.
But do you think that if they ask for access, that is something you would consider signing off on? There
are a lot of things I would consider, but look, we're in the middle of the tax filing season right now. We even, with the government buyouts that expire at midnight tonight, we have mandated that the IRS customer-facing employees, that they're not eligible for that until May 15th. So I don't imagine anything's going to go on at the IRS until then or beyond.
Elon Musk just half an hour ago, tweeted out that Treasury needs to stop approving certain payments. Has your staff tried to block any payments here at Treasury?
We have not, and I'm glad you asked that too. And just to put in perspective, Elon and I are completely aligned in terms of cutting waste and increasing accountability and transparency for the American people. I believe that this DOGE program in my adult life is one of the most important audits of government or changes to government structure we have seen. That when I was in my 20s, we had the Grace Report, and there's some great suggestions that came out of that, never implemented. Under Clinton and Gore, I think it was to government efficiency or reduce government, nothing happened. So President Trump came in, there's a big agenda, and I think that there are gigantic cost savings for the American people here. And I think it's unfortunate the way the media wants to lampoon what is going on.
And that, of course, is the U.S. Treasury Secretary Scott Bessent there with Saleha Mohsin of Bloomberg News. Saleha, great stuff. Thank you so much. Really appreciate it. All right, everybody, catch that full interview. You can find it on the Bloomberg and at Bloomberg.com. Coming your way on TV, The Close. Tim and I continue on Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. Federal workers have more time to consider President Trump's proposed buyout offer now that a judge has temporarily blocked it. Jackie Simon is with the American Federation of Government Employees.
It's a very, very bad deal for the employee under certain circumstances.
CBS's Linda Kenyon is at the White House.
White House Press Secretary Caroline Leavitt says many federal workers are embracing the offer.
The last time I checked in with Office of Personnel and Management, there was more than 40,000 individuals, federal workers, who had accepted the buyout program.
Leavitt says the plan will cut government spending.
It's going to save the American people tens of millions of dollars, and we encourage federal workers in this city to accept the very generous offer.
A federal judge has scheduled a hearing for Monday and told the administration it must extend the deadline for workers to apply for the program. Linda Kenyon, CBS News, the White House.
House Democrats have introduced the Taxpayer Data Protection Act to counteract Elon Musk and his Department of Government Efficiency, which has already frozen funding for many federal programs. Here's Illinois Democratic Congressman Sean Casten.
We are in the midst of a constitutional crisis.
Casten mentioned a narcissistic billionaire running the government who peddles in fascism, but didn't say if he was referring to Musk or Trump. A federal judge in Seattle has blocked the president's order banning birthright citizenship. Washington's Nick Brown was one of the many state attorneys general who had sued to block the order.
The United States government cannot take any action to enforce or implement the executive order that was issued by the president, and we will see what next steps the United States tries to take. But for now, the law remains, and we'll be subject to the court's further rulings.
The judge called birthright citizenship a fundamental constitutional right. Homeland Security officials tell CBS News Secretary Kristi Noem plans to visit Guantanamo Bay tomorrow. She wants to see how the conversion of the naval base into a detention center for undocumented migrants is coming along. Southern Californians are on alert for mudslides. It's been raining there much of the week, and there's more rain in the forecast tonight. This man lives in wildfire-ravaged Pacific Palisades.
I do think that a lot of the residents around here are probably worried about it. Now that the ground's cleared, I'm sure the mud will flow right down.
The Mona Lisa is getting a new home.
I'm Elaine Cobb in Paris, where the Louvre Museum is about to undergo a major overhaul. The most visited museum in the world has simply outgrown its main entrance at the Pyramid, and so they're going to build a new entrance on the eastern side.
The museum is in dire financial straits, so it's planning to raise its ticket prices as well. Wall Street in the red this afternoon. Dow's down 243 points. NASDAQ off by 13. This is CBS News.
federal and state-funded programs.
The rebranding of the Boy Scouts seems to be working.
The Boy Scouts of America became Scouting America as the organization looked to move past scandal and bankruptcy. The group's president says it will continue leaning into a broad message of inclusivity as it celebrates its 115th birthday Saturday. There was a backlash to that, but new interest has outpaced it. There's been a membership gain of about 16,000 new scouts, up less than 2% from the year before. Participation plunged during the pandemic. Scouting America reports just over 1 million members now. Steve Kathan, CBS News.
The flu is surging for a second time this season. At least 41 states are reporting high or very high levels of the virus. Some states have closed schools. Emergency room visits for the flu are up 30% this week from a week ago. So far this season, there have been more than 1,100 flu deaths. Doctors stress it is not too late to get your flu shot. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are 55 minutes away from the closing bell on this Thursday, also away from Amazon earnings. They are among those that are reporting after the closing bell. Hello, I'm Carol Massar along with Tim Stanovec. And yeah, we've got markets taking a leg down here.
We do. We're going to have more from
Slightly.
Charlie in just a minute, but the S&P 500 is down 3 points. I mean, I'm saying points. I never talk in points, but it's down basically 1/10 of 1%. The NASDAQ about the same.
mellow.
The Dow down about 0.5 percentage point. I want to thank all our viewers and listeners for getting in touch. Reach out to us on the Bloomberg terminal. Send us some
Please.
IBs. Send all complaints to Carol Massar. Send everything you like to me.
I actually will respond. Tim is
Yes.
always like, why are you responding?
Yeah, send all complaints to Carol.
I'm good with complaints. Bring them on.
No good segue here, but have you seen what Ford shares are doing?
Yeah, down 7%.
Yeah, the company's got a lot of challenges. The EV market, the prospect of tariffs, to name just a few. We're going to break it down with Keith Naughton, our man in Detroit, in just a minute.
Looking forward to that. Also, as you know, we've been talking about this. Saleha Mosin's interview with U.S. Treasury Secretary Scott Bessent, making a lot of news, talking DOGE, talking the IRS, talking tariffs, the Fed, and a lot more. We're going to have more from that interview, some of the highlights that we are certainly keeping a watch on.
The report card is in, Carol, and it is not good.
This just is depressing. We're talking about U.S. education.
Yeah, Sal Khan is going to be joining us of Khan Academy. He knows a ton about education. You've all seen the videos on YouTube. Perhaps you've used them to help in your own education journey. He's going to tell us where the U.S. needs to go after students' reading scores dropped to the worst in more than 20 years.
Very interesting. As we know, the U.S. government, the education department in particular, is on the radar of Elon Musk and his team. So we're going to talk about that a little bit later on. Hey, let's get to it, though. And the trade on this Thursday, let's turn things over to Charlie Pellet.
All right, thank you very much. And here's what's going on. 53 minutes to go ahead of the closing bell. Stocks lower across the board. Little change, though, as Tim mentioned, on the S&P at 6,057. Right now, the index down 4, down just about 1/10 of 1%. NASDAQ also lower by 1/10 of 1%. The Dow down 225, drop there of 0.5 of 1%. Certainly Honeywell weighing on the Dow. Honeywell, by the way, down 5.5%. The 10-year 4.43%. The 2-year 4.20%. Gold down $10 the ounce, 28.56 right now. On gold down 0.4 of 1%. West Texas Intermediate crude 70.50 a barrel, down 0.8 of 1%. And Bitcoin just above $96,000, lower now by 0.9 of 1%. Bonds paired losses as Treasury Secretary Scott Bessent reiterated his view on a lower path for 10-year yields under the Trump administration.
The 10-year, I believe, is the important price to focus on. It's mortgages, it's long-term capital formation. So, and look, I think with the president's policies of energy dominance, deregulation, and non-inflationary growth, I think that the 10-year is going to naturally come down.
And again, 10-year right now, 4.43%. In that interview, Bessent also said he did have a constructive meeting with Fed Chair Jay Powell. Stocks, we've got Honeywell shares, as I mentioned, trading lower by 5.5% on that breakup plan. Qualcomm after earnings down 4.8%, and Ford after earnings down by 7%. The big event after the close of trading, Amazon earnings, and we'll have complete coverage as that news breaks. Again, Amazon up by 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, whenever and wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Ford shares down 7%. The company warning that profit this year may fall by $2 billion or more due to lower vehicle prices and costly new model launches, adding to risks posed by potential new tariffs under President Trump. Keith Naughton is Bloomberg News auto reporter. He joins us from Detroit. Keith, what surprised investors? We knew about these struggles. We knew that tariffs would affect the company. What was surprising here? What's surprising to investors?
The thing that disappointed investors the most, Tim, is this guide that they gave for earnings this year of between $7 billion and $8.5 billion on an EBIT basis. Ford last year made $10.2 billion, and for the last 4 years, they've made around $10 billion on an EBIT basis. So it's a big drop in profit that was not foreseen. Ford is blaming it on car prices are going to fall about 2% this year, but more importantly, they're launching some big important new products in the first quarter of the year, the Lincoln Navigator and the Ford Expedition big SUVs, and that's going to completely wipe out profits in the first quarter.
You know this business, is that typical? Or I guess what I'm trying to get to is it industry-wide stuff or Ford-specific stuff here?
Definitely Ford-specific, because if you look at General Motors a week ago, they gave guidance that said their profit would improve this year. And so the issue is this big launch cost in the first quarter. It's bigger than the street anticipated. They didn't think that it would, wipe out profits entirely for the first quarter. Ford now says all they'll do is break even in the first quarter. These are big and profitable products that they are redoing and launching. There's also the Ford Ranger pickup truck as part of the mix of these new model launches. But yeah, the street was not at all prepared for this to wipe out profits in the first quarter, and that's why the stock has fallen to a 4-year low.
Okay, tariffs. He spoke, Ford CEO Jim Farley spoke to our Bloomberg TV team yesterday. He said that 25% tariffs would lead to job losses. He asked the administration for a reasoned tariff approach. How much would tariffs affect this company? There are different estimates out from different analysts. How do you view it?
Well, I mean, Jim Farley himself, in that interview on Bloomberg TV, said it would cost, first he said it would cost the industry billions and billions, and then he said it would cost Ford billions and billions if it was a prolonged tariff. One of the points he made, which I thought was interesting and not really one that we've heard a lot of so far, was that, so if you just have tariffs on, Canada and North America, that really punishes the North American manufacturers the most. Because meanwhile, here's Toyota and Hyundai Kia bringing cars from Japan and Korea with no tariff whatsoever. And then all of the German manufacturers and the European manufacturers bringing them in from Europe with no tariff whatsoever. So Farley said that would be an absolute, his word, bonanza for our foreign rivals.
Yeah, or no tariffs yet. I'm just going to point that out because we're waiting to see what else comes from potentially from the White House and President Trump. I want to go back to the Navigator and the Expedition. It's got to be jarring, right, to say that it's going to wipe out profit in the first quarter. These are big vehicles. These are, I'm assuming, Keith, a higher margin. So is it potentially that these investments do make sense longer term, the redos, if you will, and that they can make it up later on, or that they can anticipate high demand? Help me out here in understanding that, is it worth the investment, just kind of a really big bummer of this, the first quarter?
Yeah, I mean, what Ford is doing, as are other, legacy automakers, is they are retrenching from estimating the electric vehicle market. So they're really trying to dial up They're traditional internal combustion engine, gas guzzling big vehicles that American consumers love and pay a lot of money for, and that are highly, highly profitable. They need to make more money off their traditional gas vehicles to make up for the huge deficits they have on the EV side. Ford lost $5.1 billion on electric vehicles last year, $5.1 billion. And remember, I said they expect to make as low as $7 billion this year. So
it's real money.
It's real money. And they do make a ton on the Navigator and the Expedition. Those particular big SUVs are built in the same Kentucky factory where the Super Duty pickup truck is built. And the Super Duty pickup truck, which sells to a lot of commercial contractors and is the best-selling vehicle in America, that is Ford's most profitable vehicle. So that's also being disrupted in this changeover, and it's really taking a hit to their earnings. But yeah, they need these big gas vehicles in order to, keep the lights on.
Keith, one thing we wanted to ask you about, we've been talking about this for like the last 24 hours, EREVs, because you've written quite a bit about these extended range EVs. Will these save Ford?
If they can hang on until they get there. Yeah, the EREVs are very good, and they really seem to be a great solution. Stellantis, Chrysler parent Stellantis, is also coming with an EREV later this year on their Ram pickup truck. The new Scout line from Volkswagen, the EV SUVs and pickups, will also have EREV versions. You guys recall, EREVs, they have a small internal combustion engine that just recharges the battery. It's not driving the wheels. So for most of the time, as Farley said yesterday on the analyst call, 90% of the time, you're on electric power, but you don't have the range anxiety issue, which is one of the things that really scares off mainstream buyers. But they don't get them out there until 2027. And that's also when their affordable EVs are due to arrive. Well, that's going to put them, as I wrote in a piece this week, put them in EV hell for the next 2 years.
This piece we love. And I have to tell you, I remember the first time we talked with you about EREVs, and I'm like,
you're like, what is this thing? Why don't we have these now?
Why are we not doing this everywhere? It just seems so logical.
Doesn't it?
Yeah, it really does.
I agree. No, it solves the problems, because you also don't need as big a battery, which is the biggest, most costliest item on an electric vehicle. So it lowers the cost of the vehicle, and it extends the range of the vehicle by as much as 700 miles. Wow.
Hey, range anxiety is a key player in a piece that you wrote earlier this week, Keith. I love this story about a family in California who was excited about that F-150 Lightning, but found that the range wasn't exactly as advertised.
Exactly, and now they want to get rid of it. So yeah, I found this guy who has 2 kids and a wife out in California, and got an F-150 Lightning, loved it, loves the speed, smoothness. His daughter loves the front trunk, that opens automatically, sort of like a dragon's mouth in the amusement park. I love it. But then, when he drives the family to visit his parents who live 130 miles away, drives through the mountains in Northern California, and the range drops precipitously. And he's getting down to like 40 miles of range, which is basically riding on E. And it's freaking him out, and he just can't live with that. And so he wants to get rid of it and buy a gas guzzling Super Duty pickup truck where he won't have range anxiety and where he can drive through mountains and pull trailers and live his life.
Yeah, it's pretty wild. This deep dive by you, Keith, into Ford, and it's got to survive through what looks like could be a rough year or two here to maybe the other side, maybe even longer. Great stuff. Keith, thank you so much. Keith Naughton, he's auto reporter at Bloomberg News. Check him out on X at Keith Naughton, and also check him out on the Bloomberg and at Bloomberg.com. You're listening and watching Bloomberg Radio. Where do we go next?
Scott Besson.
Ah, yes.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P and NASDAQ back in the green right now. The Dow does remain lower. Dow Industrials down 189 now, down 0.4%. But with 39 minutes to go ahead of the close, S&P up by 4, up by about 0.1%. The NASDAQ Composite Index up by 0.1%. The 10-year 4.43%. The 2-year 4.20%. Spot gold down $11 the ounce, down 0.4%. And West Texas Intermediate crude down 0.8%, $70.48 a barrel. A sense of caution ahead of Amazon earnings and tomorrow morning's jobs report. The options market is betting that the S&P 500 will move 0.9% in either direction after tomorrow morning's employment numbers. Investors are focused on average hourly earnings and labor productivity data. Treasury Secretary Scott Bessent is reiterating his view on a lower path for 10-year yields under the Trump administration, and in a wide-ranging interview on Bloomberg Radio, Bessent also talked about China and trade.
China is the most unbalanced economy in the history of the world, and they are in a deep recession right now. They're experiencing deflation, and they're trying to export their way out of that. And we can't allow that. We want fair trade, and part of that is taking a strong position on the currency and the terms of trade.
Treasury Secretary Scott Bessent interviewed on Bloomberg Radio. Again, Amazon after the closing bell. Amazon ahead of earnings, up by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that, Charlie. Do appreciate it. Well, earlier today, U.S. Secretary of the Treasury Scott Bessent sat down for a live interview with the Big Take DC podcast host and Bloomberg News senior Washington correspondent Saleha Mosin at the Treasury Department in Washington, D.C. They talked about a lot, including Elon Musk and the Doge team's actions, access, and who they exactly are.
These are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, the program in COBOL, I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections. I'm concerned about privacy. And I'm concerned that the system is robust.
There you have it. U.S. Treasury Secretary Scott Bessent speaking with Saleha Mosin. She's the host of the Big Take DC podcast, also Bloomberg News senior Washington correspondent. They were at the Treasury Department in Washington, D.C. Check out that full interview at Bloomberg.com and also on the Bloomberg terminal.
Well, got to say, the Treasury Secretary touching on many of the issues that are top of mind for investors today. Another thing is, no doubt about it, is earnings. And we got a snapshot of what's going on in Big Pharma thanks to results from two big players. Pfizer reported on Tuesday, Eli Lilly reporting results this morning. You know, you've got that going on, and then you've also got Robert F. Kennedy Jr. clearing a Senate panel, making his way toward confirmation next week. It's something certainly Big Pharma has been watching, Tim.
For more, we're joined by Jeff Meacham, Managing Director and Global Head of Healthcare over at Citibank. Shares of Lilly higher right now by just about 3%. The earnings forecast came in line with analyst estimates. Jeff, there was some discussion on the call about whether Lilly is at all concerned about demand, given the weird supply chain dynamics that have led to 2 consecutive sales misses. Lilly brushed off those concerns. Are investors right to be concerned?
Yeah, it's a great question, Tim. And by the way, thanks for having me. You know, demand is by far, I think, one of the bigger picture concerns for Lilly. If you don't have demand, the stock really is not going to work. But I'd say 3Q and 4Q, the disappointments that we saw, I think were mostly related to inventories. And we've done physician checks. You're looking at all the competitors, including Novo. Demand is unequivocally strong for obesity, and it's still very, very strong for diabetes as well. So I feel very good about the picture. I'd say today's move in the stock is really a bit of a relief that there's now a beatable bar on top and bottom line, and that there's less, I think, anxiety right over trying to beat bigger numbers that are really kind of outsized.
I mean, and going, just staying with the obesity market, Jeff, I mean, what are the latest numbers in terms of the potential for this market? And are these numbers, do they continue to go up?
Yeah, good question, Carol. Yeah, I mean, I think if you look at the end of the decade, clearly we're talking about this being well more than $100 billion market. Diabetes should be a very big component of that, but obesity, I think, is obviously in its hyper growth phase. No one's talking about obesity being a 25-30% penetration kind of market. Even being $100 billion potential for GLP-1s or more, we're talking about still a 10-ish%, 10-15% penetration in obesity. So there's a lot of room to go. Even if pricing collapses, you still have, I think, much stronger likelihood that people will want to go on the drugs. But the other thing that's not really talked about is that you have a bunch of other indications: sleep apnea, heart failure, chronic kidney disease. Lilly just announced hypertension with their new oral orforglipron. So the totality of indications that could address, it probably could be multiples, right, of the current, diabetes market. There's a lot of these indications are obviously related.
Is this likely to be, this class of drugs, the largest, kind of drug group ever in the pharmaceutical industry?
I think so, and it's not that we're just talking about a simple weight loss drug in obesity or HbA1c kind of management and diabetes. I mean, these drugs reduce risk of death, of cardiovascular disease. They lower lipids, they lower blood pressure. So the totality of the benefit is very dramatic, and I think if you look at the Venn diagram of overlapping indications, certainly diabetes and obesity are at the core, but there's a ton of other indications that, Lilly and Novo haven't even talked about, but still could easily be addressed.
But it's all basically, lose weight. I'm not trying to be silly about it or stupid about it, but it's the concept of, obesity and the problems that creates on an individual, but that you, courtesy of a drug, lose weight, and then so many other health ailments go away.
You are right that losing weight is by far the biggest component of it. But we also see in a lot of these trial readouts, things like changes in behavior, like reduction in compulsive behaviors. So it's more than just the weight. There is sort of the gut-brain axis, piece of it, which is still have yet to be fully, vetted out. But certainly, there are other mechanisms in place besides just sort of reducing, for example, the time that food goes through the gut, and that is a direct result of losing weight. There's probably I don't know, half a dozen, sort of mechanisms that are in play kind of in the background that I think we haven't really fully vetted yet.
We've got to talk about RFK Jr. and what he could mean for drug makers or vaccine makers. Do you think he'll be more focused on food? Do you think he'll be more focused on pharmaceutical companies? During the early parts of his hearing, there was a lot of focus on pharmaceutical companies and funding. How are you viewing his likely confirmation?
Yep. Yeah, I'd say overall, I think there's a very high probability that he is ultimately confirmed. I think food is less controversial, for sure. I think the only thing really here is, how strong is the food lobbying group as sort of pushing back on some of the changes. But in the pharma world, though, no one's talking about, and he's not talking about pulling vaccines from the market. All it really is maybe recommendations coming down from, for example, CDC or FDA. I think it's just transparency is the main objective there. The other debates really are IRA discounting. Is it going to be still a direct negotiation between CMS and drug companies, or is it going to be another mechanism like, lowest price in the G20, most favored nation discounting? We'll see. But there's only a couple of hot button issues really that we have. But I would say his hearing, though, I think really validated the fact that he's not going to govern with the same kind of off the cuff kind of commentary that he had on podcasts, for example, prior to the election.
Interesting.
Well, and it's interesting, and just, got about a minute left here. Pfizer also came out with their earnings. That was on February 4th, so a couple of days ago. Stock was traded lower. The CEO, Albert Bourla, talking about having, I believe, dinner with Robert F. Kennedy Jr. I think the president, he said, had introduced him and also saying, I feel cautiously optimistic that they will be very, very prudent with everything that they do, referring to Kennedy and the Trump administration. Good that they're having a conversation, expectations too in terms of policy, and just got about 30, 40 seconds here.
Yeah, for sure. I would say the main thing coming from Trump and the public commentary is really that no matter what, the biotech and pharma industries are one of the more innovative sectors that we have in the U.S. And I think if you have aggressive discounting mechanisms, if you reduce access to the drugs, I think you're going to mute the impact of that. And so I think there has to be a bit of a balance. And Bobby Kennedy and Trump and a lot of the other folks working with RFKJ across healthcare, I think are going to help with that. But it's good to recognize, though, that the sort of the innovation and the access to novel drugs is really kind of at the forefront of a lot of the policies.
Great stuff, Jeff. Already looking forward to next time. Jeff Meachin, Managing Director, Global Head of Healthcare at Citibank. Shares of Eli Lilly up about 13% this year. Pfizer down about 3% year to date. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index higher, NASDAQ as well, minutes away from the latest numbers out of Amazon. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed right now, with the Dow currently down 193 points. Like you said, S&Ps are higher by 7, NASDAQ gains 0.2%. The U.S. 10-year yield is at 4.43%. Gold is down 11. Oil is in the red. And Bitcoin, that's lower by 0.6%. Among the main 11 S&P sectors, leaders for financials and consumer staples, energy was under pressure. And leaders to the upside in the Dow, NVIDIA and Goldman Sachs, while Honeywell fell 5.7% and led to the downside. After earnings, Skyworks plunged 23%, while Philip Morris rose 12% to an all-time high. In deal news, Paysafe is set to weigh a sale after getting takeover interest. And in other news, Honeywell is going to split into 3 companies. Wrapping things up, Amazon reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney. And yes, we'll deliver those Amazon numbers as they become available. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just about 18, 19 minutes left in today's trading session before we get to the close on this Thursday and then some big earnings. We keep talking about Amazon, but that's not the only one reporting. Take-Two, Expedia, Microchip Technology, Elf Beauty, Pinterest, Affirm. So just a few companies that are coming out after the close. We're going to be busy.
Which one are you most excited
Well,
about?
come on. Amazon.
No, I thought you were going to say you have no favorite children.
You mean when it comes to earnings?
Yeah.
I don't know. Amazon will be an interesting one just because of the size of it, the might, the cloud, the AI, all of it. AWS.
I'm curious what Jim Smigel is focused on. He's Chief Investment Officer over at SEI. SEI's got about $476 billion in assets under management. Back with us from Oaks, Pennsylvania. Jim, how are you?
I'm doing well. Suburban Philadelphia. I'm focused on Go Birds this weekend.
Okay.
I bet you are.
You're busy. Hey, are you going to have a chance to actually watch the game, or are you going to be focused on what we hear from the White House when it comes to tariffs or any other breaking news?
I will cut out Sunday evening and block everything out and be solely focused on the Big Easy for sure.
Okay. The reason I ask is because that's certainly what I think a lot of folks did last Sunday when they were hearing from the White House about reports of tariffs and the news that we did get. How are you
They were
looking at...
watching the Grammys? Is that what you were saying?
No, I was, were you watching the Grammys?
I was.
Oh, okay. I was trying to read up on tariffs and,
There was stuff that...
U.S. Trade Representative
website,
USTR, those sorts of things. How are you looking at the uncertainty there?
We are, like most, I think, trying to take a little bit of a longer-term view. I mean, these initial kind of forays, particularly when it relates to Mexico and Canada, I think President Trump did kind of attach enough of a border and fentanyl issue to those tariffs that we weren't overly surprised that they kind of came off, or at least that can was kicked down the road for 30 days.
I think just to jump in, I think that for a lot of people that may make sense for Mexico, but there's been concern about, well, what's the actual measuring stick if only, sub 50 pounds of fentanyl came into the U.S. from Canada last year?
Yeah, if you dig into that a little bit more, there was a huge British Columbia bust of a fentanyl lab. When you hear the 50-pound numbers, that's what gets caught. I think the reality is it's a very long, porous border to the north. And I would imagine that those in the Justice Department are aware that is a bit more, that is a bit more than what maybe the headlines of 50 pounds would suggest.
That's a good point.
All right, so a lot coming at us, earnings. You've got whatever comes out of Washington in terms of policy or changes. you know, it was interesting. We've been kicking around a story that has come out on the Bloomberg. I just want to pull it up here. This has to do with what President Trump might do in terms of, as he moves on to one of his next priorities, tax priorities, and outlining some of them in a meeting with Republican lawmakers, including ending perhaps the carried interest tax break, expanding the state and local tax deduction.
Excuse me?
Yeah.
Salt?
I live in a high salt. Yeah, that'll make me happy. But having said that, tax policy is going to play into certainly the amount of money that potentially is out there in the economy, also could play into the inflationary pressure. So how do you roll into how that might mean investors might want to think about their portfolio at this point? Or maybe it's too soon.
Yeah, I think there's a little bit of that, right? We're seeing that with the tariffs, because that's what 2025 is, particularly this first 6 months, is going to be this big balancing act. You know, what are the positives that we're going to see from deregulation, from lower taxes, from a fiscal stimulus perspective? How are we going to balance that out from potential inflationary pressures coming from tariffs? I mean, this is really what we're all faced with, and you know, as this administration is prone to, there's going to be a lot of headlines before there's actually action. So the only really way for the investor to kind of handle this is take a slightly longer term view. We think that balancing act does leave us positive risk assets here in the short term, but you know, we're keeping our eye on rates. We're keeping our eye on that magical 5% level. That's kind of our guide for 25 to see when we start getting a bit nervous, and perhaps investors should get a bit nervous as well. You know, tomorrow, excuse me, the employment report, very, very important. Chair Powell kind of really blew off that part of the Fed's mandate at the last press conference, saying, "Look, we think the employment situation is perfect right now. You know, there's a chance the whisper number being 170. We also get revisions tomorrow, which is very, very important. That's something that could actually be a market-moving event if that tilts this kind of Goldilocks scenario with the employment situation one way or the other."
We talked about that earlier with Stuart Paul. Yeah.
Hey, Jim, in your view, was the Fed chair, was he right to sort of shrug off the concerns about labor? I mean, it was just a few months ago that labor it seemed to be more of a priority when it came to that dual mandate. Do you think he's right here?
I think he's a little too confident, because you know, when back to my notion of this balancing act with regulation and tax cuts on one side, tariffs and immigration reform on the other, you know, it kind of comes down to this wage pressure issue. Is there a chance that as we get through the first quarter and into the second quarter, we see some wage pressures building? That could make things a bit more difficult for the Fed, and the story that they can look past employment and focus on inflation as kind of their real problem child.
Hey, one thing I wanted to ask you, there was a story out there, this coming from JP Morgan's global quantitative and derivative strategist, that investor sentiment across the so-called mom and pop traders reaching the highest level on record. So we're talking about retail traders. Is that a positive sign in your view?
It's a positive sign in one way, in that what's really been working in the market for the last 12 months is momentum. And that's kind of a bit of a sign that momentum is probably going to continue in the near term. From a timing perspective, when you get that massive amount of optimism, you know, you're always asking yourself in the back of your mind, are we getting close or calling a top? We have all these earnings coming out. That's really what 2025 is going to be. Can earnings deliver? We don't see a lot of multiple expansion from here, not surprisingly. We do see, and I think this was mentioned a bit earlier, financials actually are having a great year. That broadening out of equity performance is something we do expect to continue. And that could actually make the mom and pop trade one that is correct. It's just not going to be driven from the same concentrated players as we've been seeing.
All right, we're going to leave it on that note. Really appreciate the overview. Jim, take care. Have a great weekend. Good luck on the big game, although I am kind of rooting
Carol,
for Kansas City.
Chiefs fan, so...
I'm a Giants fan, so I can't.
Is that what it is? Is that all it is?
Yeah, kind of.
It does nothing to do with...
Yeah. You don't want to wear a Giants
jersey
at
has nothing to do with like anything else?
Philadelphia. What?
Nothing to do with anything else? Like...
No, it's not the Taylor thing.
Okay.
Yeah.
I'm just making sure.
That's kind of interesting. I don't know. And it was really cool to see them win again.
It was a lot more interesting in last year.
Why?
Everyone was talking about it last year. Now nobody
It was
really
newer,
cares.
right?
Yeah, nobody really cares
Can't
anymore.
keep track. Okay.
I don't know.
Welcome to Bloomberg Business Week, the People magazine version.
Elizabeth says, "Fly, Eagles, fly."
Yeah, boo on you. All right, everybody. Stick around. We're going to count you down to the close. Just about 10 minutes to go. This is Business Week.
Listening to Bloomberg Business Week with Carol Nasser and Tim Stenovec on Bloomberg Radio and Television.
All right, we are under 7 minutes to go until we wrap up the trade. It feels like a Friday. What is in my head?
It's because this has been the longest week of the year.
God.
It does feel like it.
It does.
You know what it is?
Oh, what?
There were some holidays recently.
When was the holiday?
Well, we had a
on the
MLK
inauguration.
Day for inauguration, and then we had another. Let's see, what was it? Oh, it was the markets were closed for Jimmy Carter's funeral, so I feel like there have been a lot of shortened days, shortened weeks over the last few.
Not shortened.
I'm
for
just
us.
trying to help. Just trying to help. Yeah, I know, but I'm just trying to help you.
No, there's a lot coming at us.
Or maybe there's something wrong with you, Carol. That's what it could be.
Oh my God, let me bring out the list. There is so much wrong with me. Having said that, we do have some big earnings coming after the close, including Amazon, so we're going to break that down. In the meantime, a couple stories that just popping on our radar that we want to share with you. One has to do with the Melania meme coin. It's down 90%, so it's lost about 90% of its value since it launched, while Donald Trump's token has seen its price fall about 75% from its all-time high. We're only talking over the last couple of weeks?
Yeah, these came out just ahead of the inauguration.
Yeah.
We should note meme coins are highly volatile and generally do not have much intrinsic value. This according to our Bloomberg News team. The tokens can often depend on something going viral, but that can be short-lived. This is according to Stephen Willett, who's CEO and co-founder of Front Financial.
We should point out that when those meme coins came out, I know our team talking to a lot of folks, basically there was a mixed reaction from the crypto industry, with some seeing it as like a commitment to crypto, so yay. Others believing it hurts the industry's credibility, so nay. So, you know, something maybe some would say is a little bit more frivolous without maybe a real use potentially versus maybe some of the other crypto coins.
Versus the ones that you use all the time to go and buy all the stuff, buy your groceries?
To buy my eggs. Yeah. Exactly.
Hey, speaking of crypto, team Bloomberg exclusive from the crypto team about the Winklevoss twins.
Oh, what's up with that?
Gemini, the cryptocurrency firm backed by the billionaire Winklevoss twins, is considering an IPO as soon as this year. This is according to people familiar with the matter. Deliberations are ongoing. No financial decisions have been made on pursuing an IPO, the people said. A representative for Gemini did not immediately respond to emails or text messages seeking comment.
Well, all this makes sense, right? Because Donald Trump now seen as certainly someone who's much more favorable to the crypto industry. So if you've got, you know, a move that you want to make, it probably makes sense to do it now. I want to go to another story that's definitely on our radar, also from the Bloomberg News team. And this has to do 2 days after U.S. federal workers were presented with a deferred resignation offer. The TSA clarified to its tens of thousands of employees that they were not allowed to participate.
Really?
Yeah.
Okay.
Yep. That was that, you know, January 30th, I guess, memo, fork in the road.
Yeah, like
the
what
email
Elon
actually
said.
they got on January 28th, right? And they had a couple of days to respond. Email was confirmed by an FAA spokesman or a federal agency spokesman familiar with the matter, who said TSA employees were excluded because they are considered part of national security. Yeah, I would agree with that.
This offer, though, did attract more than 40,000 signups as of Wednesday, Bloomberg reported earlier. The deadline to apply is the end of the day today in Washington.
But didn't we say that there was, I thought there was another story. This is kind of the environment we are living at, because everything is kind of coming at us. I thought there was a judge temporarily delayed the February 6th deadline for millions of federal workers to decide whether to accept the Trump administration offer to resign with the promise of months of full pay. So there's really this fight over the lawfulness of the buyout push going forward. So there's that going on. Yeah, you got to be nimble. There's stuff coming at us constantly. So we will see ultimately how this plays out. Hey, looking at the markets, folks.
Can you imagine if the TSA workers, they were like,
no,
peace.
Yeah, peace. Yeah, peace out. Hey, enjoy that flight.
Yeah.
No, it would just stop. It would just have to stop. You would have to probably pull back on capacity in the air. Okay. Anyway, right now we are seeing some buying into the close. You've got equity averages pretty much at their highs of this session. Not real big moves, just up about 1/3% on the S&P 500. So just shy of a 19-point gain. NASDAQ 100 up about 0.5%, 104 points to the upside. Dow right now down about 1/3%. Do not go anywhere. We've got Amazon and other earnings coming your way. We're heading over to our TV colleagues. That's because the closing bell starts right now.
Session. We have Amazon earnings coming up. We have full coverage right here.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Alex Steele alongside Scarlett Fu. We're going to take you through the closing bell through a global simulcast. We're now joined by Carol Massar and Tim Stenovic. Romaine Bostic is off today. We're going to bring together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the day, rallying into the close, guys.
Yeah, right. Just some buying. You're seeing an uptick, and we're pretty much looks like we're going to close at our highs of this session. Having said that, not real big moves, but we'll see what Amazon does after the close in terms of affecting market sentiment.
Hey, how about tomorrow's payrolls report? That's kind of the next catalyst I think people are looking for. The revisions for last month as well, obviously going to be very important. But we're kind of rounding out, getting toward past the Mag 7 when it comes to earnings. All we have after today is NVIDIA.
Yeah, but NVIDIA's not for another 3 weeks, so we'll have to entertain ourselves with retail
What are we gonna
earnings.
do?
We're going to really fixate on the jobs report. Is it going to be the non-farm payrolls, the unemployment rate, or the average hourly earnings that people are going to obsess over and react to? It's kind of up for debate.
What's also interesting is you read some notes from JP Morgan's trading arm as well as Scott Rebner over at Goldman Sachs, and they both point out that the retail army is alive and well, like mom and pop investors coming in and buying all the dips, like 2 to 3% decline, and they are in there. And then you get get corporate buying, and you have some kind of support here for the market.
Yeah, we just talked about that with our market guest too, saying the same thing, that is certainly a positive sign. And there's a fair amount of earnings that have been supportive as well.
But does it also say something about where we are in the cycle if the retail army is feeling confident?
I don't know.
What
That feels like investment psychology.
Like getting tips from the taxi driver or the shoe shine boy?
Exactly.
I don't know about that, guys. All right, here we go. We're closing out this Thursday, moments away from Amazon. We're still settling out here, but it looks like the S&P is up by about 0.3%, a kind of a straight shoot higher here in the last hour of trading. The NASDAQ outperforming, up by 0.5%. Dow Jones, guys, a little softer, down by 0.3.
All right, taking a quick look at the S&P 500, almost an even split here. You've got about 259 names to the upside, Scarlett, 243 to the downside.
All right, let's take a look at the IMAP. A lot of green on the screen there, led by consumer staples, which are the best performers of the month as well. That group up 0.9%. Financials also gaining ground, about 0.8%. Tech in the green here by 0.6%. The laggards of the day, energy, healthcare, and utilities.
All right, guys, to some of the individual gainers. Ralph Lauren up almost 10% in today's session, hitting a record, reporting fiscal third quarter results that broadly top Wall Street expectations. They boosted their annual forecast for revenue growth and margin expansion. Off to another in the retail group, Tapestry up about 12%. It was the top gainer in the S&P 500, jumping the most since April of 2020. It raised its guidance again for the year on stronger than expected sales of its biggest brand. Coach, we've got Amazon out, guys.
All right.
Yeah, go. You go.
Oh, no. Go ahead. Amazon.
Okay, Amazon. Fourth quarter earnings for North America. Net sales coming in at about $115.56 billion. That looks like that was definitely a beat. Taking a look at AWS, that's the juicy Amazon Web Service. If you back out FX, that's up by 19%, bang in line with estimates. Operating margin coming in, and you have earnings coming in also higher, about 1.68. And first quarter net sales coming in about $155.5 billion on the high end. Caroline Hyde is joining us, co-anchor for Bloomberg Technology. There are a lot of numbers to go through. Can we just parse through a little bit here?
The forecast is going to be the unnerving part, right? The fact that they're saying the fiscal first quarter net sales will be 151 to 155, and the market wanted 158. So if we're going to say any fly in the ointment, it is the forecast. But the anxiety levels about AWS growth are going to be dialed down a little bit when you're actually looking at their numbers. We're seeing that they are managing to still bring in that 19% growth if you extract some of the FX headwinds more broadly. That is better than we saw with perhaps the Microsofts of this world. Alphabet both saw growth slow down compared to where the market had wanted it. Overall net sales coming in 10% higher where we'd wanted to see with North America, 10% higher on $115. But overall, we want to really see about what the capital expenditure means. The holiday shopping season, so says Andy Jassy, is the most successful yet for Amazon. Remember, if they're managing to be bringing in substantial amount of net sales that are meeting expectations, that means their net sales were bigger than that of Walmart for the first time here in the United States. We're also talking about appreciating the support of our customers, selling partners, interesting selling partners. Some of them are Chinese. We'll see what that means in terms of the de minimis issues, how it affects their business. But overall, we want to hear what they're doing in terms of Bedrock. He says, overall, they're seeing AWS introduce the new Trainium 2 AI chip. Remember, they make their own chips, and this is where the supply side was able to meet up with some of the demand side. Our own foundation models, that's Amazon Nova, a plethora of new models and features on Amazon Bedrock because they supply everyone else's models, including that of DeepSeek, I might add. And they gave customers flexibility and cost savings. He is talking up the benefits of being within Amazon when it comes to AI.
Yeah, but it all comes down to that forecast, as you noted right away. The stock is lower by about 5% in after-hours trading after the first quarter sales forecast, missing analyst estimates. And Caroline, here there's a comment about how the forecast includes the impact of $2.1 billion from Forex rates. This is a sign that the strong dollar is hurting not just some of those consumer packaged goods companies, but a company like Amazon.
Yeah, and of course they're going to have big exposure. Of course, the US is still the dominant house in terms of their overall net sales, but in the UK, absolutely focus on all things Amazon. And of course, if you're going to see US headwinds, and that's going to be an issue for a strong dollar. And you have heard that borne out by some of the other key tech names as well over the course of the operating system, that the fact that we've got to have earnings coming out thick and fast, and most of them have been saying, look, FX is going to be a headwind. I want to really dial into whether the forecast is also dialing back some of the AWS demand. That is where we want to hear some of the intricacies as to whether that might be an issue of weakness going forward. It doesn't look like they're trying to signal that,
Caroline, that's what I was curious. Like top of mind, as Andy Jassy and the team get on the call with analysts and investors, what should be top of mind? What should they be questioned most about based on these initial numbers?
Yeah, I think it's all about how much AWS will remain the port of call for corporates who want to have whole range of foundational models and indeed access to chips and compute. How much is the resiliency? How much are they going to be spending? I haven't yet seen a CapEx number come out.
No, it's not.
I remember they were meant to be spending about 76 billion for fiscal 2024, and then they might up it all the way to about 86 billion for fiscal 2025. That is bigger than anyone else out there. That's going to drive about $200 billion in CapEx spend for all of those hyperscalers in the United States for the year of 2025. So we want to understand how much they're still committing, because they've talked up about the range of offerings they have at AWS. Because despite DeepSeek, for them, DeepSeek didn't seem to be a negative. It was only a positive. Come to us, and you can have a whole range of price points and the right model that fits your current needs, whether it's pace that you need or whether it is a reasoning. And that, of course, takes a little bit longer to get the answers that you want out of a certain large language model.
Caroline, I'm looking at first quarter operating income, the guidance for that, 14 billion to 18 billion. The estimate was for 18.24 billion. So that obviously very light compared to estimates. Where's this money going? Is this money being reinvested back into the company? Are they spending it on AWS? Is the shipping costing more than they thought it would? Why the operating income coming in so light?
I mean, it's interesting because the operating margin is still looking very good, and that's 11.3%, and the estimate had been for 10%. So they're still managing to do more in terms of dialing down costs, and the operating income for the fiscal fourth quarter, 21 billion versus 18 billion. So for the previous year, that focusing on bloat, that taking out of costs from middle management layer, the being able to do more with less, has been really a focal point for Andy Jassy. So I think that's notable that going forward into the first quarter, they are going to have an issue. They're also talking up about the impact of a leap year, and that being added $1.5 billion in terms of net sales for their first quarter 2024. And so that's going to mean that it's a difficult comparison for their fiscal 2025. But they are probably going to be giving us a capital expenditure outlay that maybe speaks to why operating profit isn't just being handed back to investors.
And just to also add on this before we move on, Amazon Web Services net sales estimate actually fell below that estimate, 28.79 billion. It was just a little light, and then you bring into the fact that their net sales excluding FX estimate came in line with expectations at 19%. There was not that upside in addition to that. All right, Scar, what you got?
Yeah, that idea that every company has to not just match but beat with the numbers that they've been given. All right, let's just move on quickly here to Expedia, because Expedia, the online travel company, also did report earnings. Revenue beat, adjusted EBITDA beat analyst estimates, EPS beat as well, and the company restored its dividend as well, 40 cents a share starting in May after suspending that dividend back in April of 2020 at the height of the pandemic.
All right, real quick, Take-Two Interactive also out with their numbers. Not seeing too much movement in the aftermarket. Let's go right to the outlook. Take-Two sees fourth quarter net bookings of 1.48 billion to 1.58 billion. The estimate on the street is 1.54 billion, and it still sees fiscal year net bookings 5.55 billion to 5.65 billion. The estimate, so there's a little bit of a range there, 5.63 billion, and it looks like on the third quarter net bookings, they were pretty much in line, a little bit light, $1.37 billion. But right now you see that stock up about 1% in the aftermarket.
Hey, one stock that's up quite a bit in the aftermarket is Pinterest, higher by about 22%. The company's first quarter revenue has beat forecasts. The company sees first quarter revenue 837 million to 852 million, beating estimates of 835 million. Fourth quarter revenue also came in a touch above estimates.
I just want to point out Elf Beauty here. That stock also tanking right now. It cuts its annual outlook on earnings as well as sales. They also are saying that they're seeing softer trends in January, so that outlook not doing well. Even though they did wind up beating on revenue, their earnings were a miss, but that outlook really hurting that company right now.
All right, and Skechers USA, the sneaker company, reporting first quarter, or I should say the outlook for the first quarter sales will be lighter than anticipated. At most $2.43 billion. Analysts were looking for $2.48 billion, and it sees first quarter EPS at $1.10 to $1.15. Analysts were looking for above $1.56, so a lighter than anticipated outlook from Skechers.
All right, quick update on Amazon, which has been down as much as 7% in the aftermarket after that first quarter sales forecast missing. Right now the stock down about 3.7%, so paring back some of that decline, but that earnings call with the Amazon C-suite and certainly analysts and investors, that'll be really important. All right, guys, that's a wrap. Across platform, radio, TV, YouTube, Bloomberg Originals, we call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. We're taking a look at what's going on with Amazon. Shares right now are down about 4% in the after hours. The company first quarter sales forecast missed estimates. First quarter net sales coming in just shy of estimates as well, $151 billion to $155.5 billion. Once again, shares in the after hours for Amazon down about 4%. Let's bring in Poonam Goyal, senior analyst for e-commerce, athleisure, and off-price retail at BI. She joins us from our Bloomberg Intelligence headquarters in Princeton, New Jersey. Why the sales miss when it comes to the guidance here?
Yeah, there could be a few things going on here. They did explain the leap year, but that's not enough. The miss is still higher. So it's either that retail has slowed down, which are very well could have after a very strong holiday, or they're just being conservative with everything that's going on with tariffs and so on in the marketplace today.
Yeah. It's kind of interesting, too, because the commentary, Andy Jassy in the press release talking about, kind of what a great holiday shopping season it was for them. And just even his first commentary, everything just seems very, very optimistic. So, what would be the question you'd want to ask Andy Jassy about this forecast?
Yeah, I think things were very, very strong in the fourth quarter. So why the slowdown in guidance? I get the leap year impact, but there's more to that here. So what are they seeing that we're not seeing? I think part of that will be tariffs. But aside from that, AWS should still be strong. So we're waiting to hear on the call what he has to say.
Oh, so the forecast has to do their concerns about tariff costs or impact?
It could, right? Because we do know that they're going to be impacted to some extent with the tariffs because they do have a large 3P business. 65% of their GMV, we estimate, is from 3P. And a lot of those sellers are China-linked sellers.
This operating income line item at the bottom line here, 14 to $18 billion. The estimate was for $18.24 billion. Where's that miss coming from?
That miss has to be, they must be anticipating, if we look at the guidance, right, and you look at AWS margins in the quarter, they had a very sharp beat. So the question is something going on in AWS for the margins to be guided lighter? Because as we know, AWS is the driving force behind Amazon's profitability. And when there's weaker guidance, that's usually where we lean into for more input.
It's so interesting. We look at these companies, they're so important, the Mag 7, right, in terms of what their businesses are telling us, because they're so important in terms of market momentum and market moves. How do you characterize this quarter right now for the company?
The quarter was exceptionally strong. The quarter was very, very good across all fronts. Retail was strong. AWS was strong. Advertising in line. Physical stores was even stronger. So a very good quarter on the top line and across the margin. But the guidance is light. So it's hard to connect the dots on why such a shift when we ended with such a strong quarter. And really, we're looking to hear that on the call. So number one question is why have things decelerated or why the conservatism in the guidance?
Would it bother you as someone who follows a company like this? Because Tim and I have certainly either on air or off air, talking to leaders, certainly heads of companies who are like, we're watching Washington and we kind of have to go day to day. We just don't quite know all of the policies that may come down that impact our particular industries, and it sometimes goes back and forth on a day basis. And this is, kind of what we're hearing. So they're taking it day by day. Could this just be Amazon being cautious?
Absolutely. If that is the answer that we hear on the call, then I would say that they're just exerting more caution and things should be better than what they're guiding to should the consumer continue to spend, because there's no other reason, unless they're seeing a deceleration, a sharp deceleration, 1Q to date, for them to offer weaker guidance.
Well, could things like tariffs and stuff, like you think about what it means for Temu and Shein, is that a plus for Amazon possibly?
It absolutely is. So there's a plus and minus here. So when you think about tariffs, the added tariffs, the 10% increase on goods from China, is a negative for all of retail, including Amazon, especially their first-party goods where they have direct ownership and exposure. But when it comes to the competitive playing field, by taking away the de minimis, now the playing ground is really leveled, and they don't have that extreme competitive threat that they had with Temu and Shein anymore. So that is a plus where they can now offer comparable prices and keep margins relatively constant with their competitors.
How much of a threat have those companies been?
They have been, I'd say, more of a mind share threat than a wallet share threat. If you think about the size of Temu and Shein, right, collectively, their GMV, it's still in the US under $50 billion. So yes, it's a growing threat, and Amazon responded to that threat with Haul that they recently launched, as well as a reduction in seller fees on apparel priced under $20. So the threat was there, it was growing, but I think now they're going to level the playing field.
All right, we're going to leave it there. Hey, Poonam, thank you so much. Really appreciate it. Poonam Goyal of our Bloomberg Intelligence team watches e-commerce, athleisure, off-price retail. She is the senior analyst for that. We want to roll into our conversation. Caroline Hyde, just off of TV with us. I know, you're like running around. Amazon, so they're now down about 3.5%, so not down as much as they were. So walk us through the quarter. What jumps out for you?
Well, I think the quarter that they were reporting on, their fiscal fourth quarter, looked good. And we sort of spelt it out at the closing bell that ultimately they came basically in line with their overall sales, 10% growth across the board. You saw a 19% increase in AWS. If you're going to nitpick, there's a very small miss on AWS, but you are nitpicking here. You're looking at 28.79 billion versus 28.82 billion.
It's a nitpick, but you're right.
But I do think that just shows that it wasn't firing on all cylinders. As we've been hearing, this is a stock that was basically trading near a record high. Everyone had a lot of expectations into the AWS euphoria, and then when you're guiding towards the next quarter and sales not looking as strong as expected, yes, there's an FX headwind, but is there not enough demand going on for the cloud to be substantial?
Is this a conservative guide? Like, is Amazon known for being conservative when it guides?
Yeah, and Arm did the same, and everyone was like, oh, you're being conservative. He's like, what more can I give to you? I beat on my overall numbers. Potentially, I mean, they are known for that. And look, we're in a period of time that no one knows what the next headwind is going to be thrown at you, right?
Well, this is what we just talked about with Poonam. Like, how many, we've talked to all CEOs, either on air or off air, who said, you know, we're taking it from day to day in terms of the policies out of DC. Spencer Soper putting out, suggesting the company continuing to ramp up spending to support AI services, and maybe that's why the projected profit in the current quarter fell short. I mean, this is one of the things we got to find out on the call, right?
And I think, Tim, you put it so well when you were pointing out the fact that operating profit was looking a little bit light on the guide as well. And where is the money going? Well, likelihood is it's going on data centers, and we'd anticipated they could spend up to 86 billion.
If it's going to data centers, then why aren't they being rewarded for that? Like,
like
Meta platforms.
Well, I suppose it's like, well, the return on AI, do you need to keep on plowing it into this extent of capital expenditure that you need? We had started to query whether a DeepSeek means that ultimately the risk reward isn't quite where we had leveled it out to be. But there was so much confidence coming from leadership, AWS CEO Andy Jassy as well, that when we saw DeepSeek come out, they were like, oh, by the way, you can get R1 on our offering. Come to our plethora of Bedrock foundational models where you can get either our foundational models like Nova or indeed DeepSeek.
It was almost bizarre how everybody in the industry who probably was like behind, closed doors was like, oh my God, oh, isn't this wonderful? Yeah. Like everybody just chimed in. It was kind of crazy.
Yeah, it was really.
Good stuff, good stuff. We'll see whether or not this stock comes back, right?
Yeah.
As we watch the call. And I know you guys will be
5
covering
p.m. New York time.
Good stuff. And we'll be watching Caroline, of course, on Bloomberg Technology tomorrow on Bloomberg TV at 11 a.m. Wall Street time. Thank you so much. Shares of Amazon, guys, down about 3.6%. We come back on Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got Amazon shares down now by 2% in extended trading after fourth quarter Amazon Web Services net sales missed estimates. Poonam Goyal is a senior retail analyst with Bloomberg Intelligence. Moments ago, right here on Bloomberg Business Week, she told us, yes, she is awaiting the conference call with CEO Andy Jassy.
I think things were very, very strong in the fourth quarter. So why the slowdown in guidance? I get the leap year impact, but there's more to that here. So what are they seeing that we're not seeing? I think part of that will be tariffs, but aside from that, AWS should still be strong. So we're waiting to hear on the call what he has to say.
Bloomberg's Poonam Goyal, and again, after ours, we got Amazon down by roughly 2%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. S&P up 22 today, up by 0.4%. The Dow down 125, down 0.3. NASDAQ gained 0.5%. 10-year 4.43%. The 2-year 4.21%. Spot gold down 0.4%. 28.55 the ounce. West Texas Intermediate crude down 0.7. 70.51 a barrel. And Bitcoin now at 96,446. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Carol, we got our report card, and it's not good.
All right.
U.S. 4th and 8th grade students are struggling with reading comprehension, with last year's nationwide testing showing the worst results in more than 2 decades.
It kind of blows my mind because I know how much money is spent on education.
Yeah, so this is the congressionally mandated assessment in 2024. The results were released yesterday by the National Assessment of Educational Progress, NAEP. Curious what Saul Khan has to say about this. He's the founder and CEO of Khan Academy. It's the nonprofit that provides free lessons in math and history, economics, computer programming, and more. He's back with us from Mountain View, California. Saul, always good to chat with you. How are you?
I'm doing well. Thanks for having me.
Did this reading score surprise you?
Unfortunately not. We've the NAEP folks made this clear also in their report. I think we still have the effects of the pandemic nationwide. The scores nationally, both in math and reading, both in 4th and 8th grade, still haven't recovered from the 2019 level. This is true in almost every state as well. And it's, we had big gaps then. A lot of kids kind of fell off the rails then and haven't fully gotten back on. And then there's just a lot of complexity in serving different groups of students and a demographic mix, et cetera, that probably has made it even harder.
What's worrying too is that I think some would say it's the pandemic, yes, but we've had problems with our education system, right, across the country for a while here. And it feels like the gaps are widening. I mean, I want to ask you, I am curious, Sal, because you've been in this world for a long time. I mean, what's happening with American education?
Unfortunately, it's kind of a tale of two cities is the right metaphor here, but and the NAEP scores validated that. The higher performing students actually started to pull further and further ahead. And a lot of times when you look at some of these PISA rankings, when we compare ourselves to other countries, et cetera, if you were to separate some of the higher performing, wealthier schools in the suburbs, et cetera, they actually can compete with anyone in the world, actually do better than anyone in the world. But I think you have other large chunks of America where they're really, really lagging, and these NAEP scores only validate it. You had a third of 8th graders didn't even have basic reading comprehension. I just visited a school yesterday out here in Northern California, and I met 2 English language learners who, not only are they, obviously can't speak English, but they haven't gone to school before. They haven't read before, or they can't read at all, even in their native language. So I think those types of difficulties are some of what you're seeing here on top of the pandemic. And Unfortunately, I don't think just doing more of the same is actually the solution here. This is something that we've always talked about at Khan Academy is how do we personalize education more? You know, I saw that teacher, that same teacher that had these two students who couldn't read, who were fifth graders, also had some students who were ready for ninth grade math. So they had a huge spread in that same classroom, and you can't just do one thing for all of those 30 students. And that's where we think technology can help that teacher address the needs of each individual student.
You know, the president has cited how the U.S. lags behind other Western nations despite federal spending on students. And, you know, he is looking to potentially dismantle the Department of Education. Do you think that would be helpful?
You know, we'll need to see how it all evolves. A lot of folks have been asking me this, even in our own team. We work obviously with a lot of school districts. The Department of Education does a lot of things, but they aren't a major funder of schools, depending on what year you look at and what schools. Anywhere between 3 and 10% of funding in a given year comes from the Federal Department of Education, and it tends to be tied to certain programs. So some of those might suffer. Some of those are there by law. One of our board members is a former Undersecretary of Education, and he was explaining to me yesterday, a day before yesterday at our board meeting, that there are certain things in there that are just part of law that even if the Department of Education were dismantled, someone else would have to take it over, the Department of, you know, the Treasury Department or Health and Human Services, et cetera. So it's too early to tell exactly what the implications are, but most of education spending and policy actually does happen at the state and local level.
Yeah, so this is where you think about like state taxes, right, or city taxes and so on and so forth, that really are the determining factor. How can AI help with all of this? This is something you guys are certainly in the middle of, and improve the gaps that we see within education across the United States.
Yeah, this is something that we're definitely leaning into, and it's very easy to get enamored with technology, but I remind everyone this isn't about the technology, it's about the core problem you're trying to solve. And the problem we're trying to solve is the one we started talking about, is you have a teacher in a classroom. Before the pandemic, your average teacher had 3 grade levels in the same classroom. They're all 5th graders, but some are operating at a 2nd or 3rd grade level. Some of them are ready to operate at a 6th or 7th grade level. It's gotten worse since the pandemic, as we just talked about. So if you're a teacher, how do you address all of those needs? How do you make sure some of the kids aren't bored and some of the kids aren't lost? And so the opportunity is, well, what if you could personalize? World-class education has always looked like one-to-one. I always point out Alexander the Great had Aristotle as his personal tutor. We couldn't afford to give every student that. But what Khan Academy has been trying to do over the last 15, 20 years is, well, maybe we could approximate elements of that with on-demand video, with software. And now generative AI, I write a lot about it in my book, Brave New Words. We think generative AI, it's not going to do everything. It's not a silver bullet. But over time, it's going to get better and better at being able to provide even more personalized support, not just for students, but also for teachers with things like lesson plans and grading papers and writing progress reports.
Sal, we had you on back in May when Brave New Words came out, how AI will revolutionize education and why that's a good thing. I spoke to someone yesterday who talked about the pace of development when it comes to AI is just unbelievable. Like he says, the world changes every few months as a result of this technology. How much has it changed since you wrote the book?
It was actually one of my fears when I was writing the book. I read a book about AI. Will it be outdated the day it comes out? Luckily, I still think it's pretty, you know, I tried to make it pretty general. And even a year ago when you know, I was finishing up the writing, it was pretty clear how fast this was moving. So I tried to make it a little bit more evergreen. But yeah, it's been mind-blowingly fast. Not even every few months. I would say sometimes on a daily basis, things are evolving. A lot of what I challenge the Khan Academy team is, what can we uniquely do as a nonprofit that other people aren't going to have the horizon or the motivation to work on? And what are we going to do that's really AI proof? And we think a lot of it is, how do we connect humans together? Maybe using AI, but how do we form more human connections? Maybe how do people create proof that they know something? Credentialing. Once again, how do you make sure it's pedagogically sound as opposed to just, you know, throwing an AI in front of people? But yes, it is definitely something my head spins on almost on a daily basis. But you know, everyone feels that way.
You know, it's funny. Forgive me for doing this, but I guess because it's been front and center. You know, we're talking AI, and we've been watching what's been going on in the U.S. government. And the Washington Post had said today, reported representatives from Elon Musk's Doge service have fed sensitive data from across the education department into AI software to look into the agency's programs and spending, according to people familiar. AI being used to investigate where there's personal data possibly accessed. You are in this world. Is that something we should be concerned about, whether it's Department of Education or the Treasury Department?
Well, I'm not an expert on exactly what has happened, but yes, anytime you're talking about data related to education in particular, you have to be super cautious about how it's being used, especially if it's potentially student data. This is something where we as we take this very seriously as a nonprofit, and when we go work with school districts, we point out, like, not every for-profit company has the same incentives that we do. You have to be very cautious here on how you use it. Now, if it's all on the up and up, and I don't know what the fine print is on this data. There could be uses of AI where you can use it to make sense of large amounts of information that otherwise an individual human being would never be able to sift through. But yeah, I don't know the details of how they're using it.
No, that's fair. Hey, one other news thing that obviously we've been obsessed about over the last couple of weeks, DeepSeek. And the prospect of AI maybe being less expensive to do, and the models to be able to do. When I think about education, might that make it even more accessible for students around the globe?
Yeah, I thought it was great news from our point of view. The costs have already come down even before DeepSeek by a factor of 10, and so I expected that to continue. And then DeepSeek and some of their techniques, I think, is only going to accelerate it. But I also point out there's an unending amount of things that we can use AI for. Basic chat bots are going to become close to free, very cheap. But now, if the compute or if the applications use less compute and the compute gets cheaper, we're going to be able to do more real time, more audio, more visual things. And yes, in education and other places, I think that's only a win for the application developers.
What's the balance of technology in the classroom? It's a discussion that we had with you last time, but it seems like it's only becoming more and more of a thing. How do you use technology as a tool, but not as a distraction?
Yeah, and we have a school out here in Northern California where my kids go to school, Khan Lab School, and if you were to visit the school, people say, oh, it's associated with Khan Academy, it must be technology all the time. No, you'll actually see more human-to-human interaction than you would see, I think, at almost any other school. And I think it's all about, I would say, maybe depending on the age, as you get older, middle school, high school, college, you could get up to 30, 40, 50% leveraging technology. You're going to code, you're going to write a paper, you're going to edit video, you're going to do personalized practice on Khan Academy to fill in your gaps. And then what that does is that liberates the class time so that you don't have to give the lectures anymore. You don't have a bunch of kids with their fingers on their lips just passively listening. You can have the kids work on harder problems. They can do simulations, they can do games, and that's what we try to do. And I always point out, even without technology, you can have very dehumanizing classrooms. But if you use technology well, you could have very humanizing classrooms.
Yeah, right. You could just think about kind of where it could go, and especially the idea of personalization in terms of teaching could be really a cool thing. Sal Khan, thank you so much. Always appreciate the time you give us. He is founder and Chief Executive Officer of Khan Academy, joining us from Mountain View, California. The other thing I think about with teaching in AI is I just think about I was a pretty shy kid. I know, hard to believe, but might be afraid to offer up an answer or something because you think it's silly. But maybe if you're working with an AI teacher or TA, just think about what you could maybe get out of that.
I think Duolingo said that they have these AI educators rather than live people because they find that people who are learning languages want to interact with that tech.
Yeah, that makes complete sense because you feel embarrassed about your pronunciations or something. All right, everybody, we are continuing here on Bloomberg. This is Business Week.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. This update brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. Now see if your company qualifies at oracle.com/Bloomberg. We got Amazon shares after hours down now by roughly 1.5%. Amazon did project profit in the current quarter that came up short of analyst estimates, suggesting the company continues to ramp up spending to support AI services. Again, after hours right now, Amazon now down by 2.2%. Treasury Secretary Scott Bessent says the U.S. continues to have a strong dollar policy under President Trump, and in an interview with Bloomberg Radio, he also told us he has met with Fed Chair Jay Powell.
We did. I did an away game over at the Fed. We had a very nice breakfast. Chair Powell and I don't know each other well, so it was very constructive. Everything I'm going to talk about is things that done in the past. Prospectively, monetary policy, I will not comment on, and I'm sure he's going to do the right thing, so there'll be no criticism.
Treasury Secretary Scott Bessent interviewed on Bloomberg Radio. S&P 500 index ended the session with a 22-point gain ahead of the jobs report tomorrow, up 0.4%. The Dow down 125, down 0.3. NASDAQ up 99 today, up by 0.5%. 10-year 4.43%. The 2-year 4.20%. Spot gold down $10 the ounce, down 0.4%, and crude down 0.7, 70.52 a barrel. Recapping, we got Amazon lower after earnings. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here on Bloomberg Business Week. Well, earlier today, Scott Bessent, the former hedge fund manager turned U.S. Treasury Secretary, has been there just under 2 weeks now.
I think 9 days is the exact count, right?
I know, not quite 2 weeks. Still early in on the game, but he did sit down at the Treasury Department with Bloomberg's Saleha Mohsen. She is Bloomberg News senior Washington correspondent. They talked about tariffs, taxes, Elon, and more. Here she is in her conversation, and they talked, just kind of kicking off the conversation, on the Doge team's actions at the U.S. Treasury and who exactly is on this team.
These are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, And to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections. I'm concerned about privacy. And I'm concerned that the system is robust.
But do you think,
customer service.
But do you think that if they ask for access, that is something you would consider signing off on?
There are a lot of things I would consider, but look, we're in the middle of the tax filing season right now. We even, with the government buyouts that expire at midnight tonight, we have mandated that the IRS customer-facing employees that they're not eligible for that until May 15th. So I don't imagine anything's going to go on at the IRS until then or beyond.
Elon Musk, just half an hour ago, tweeted out that Treasury needs to stop approving certain payments. Has your staff tried to block any payments here at Treasury?
We have not, and I'm glad you asked that too. And just to put it in perspective, Elon and I are completely aligned in terms of cutting waste and increasing accountability and transparency for the American people. I believe that this DOGE program in my adult life is one of the most important audits of government or changes to government structure we have seen. That when I was in my 20s, we had the Grace Report, and there's some great suggestions that came out of that, never implemented. Under Clinton and Gore, I think it was to government efficiency or reduce government. Nothing happened. So President Trump came in, there's a big agenda, and I think that there are gigantic cost savings for the American people here. And I think it's unfortunate the way the media wants to lampoon what is going on.
All right, that is Scott Bessent, of course, the U.S. Treasury Secretary, sitting down with Bloomberg's Saleha Mohsin.
Well, speaking of Washington, D.C., Carol, the White House received more than 7,400 requests for credentials one day after saying it would open press briefings for content creators, influencers, and podcasters.
It's a lot.
Social media influencers are becoming a primary source of news for many Americans. Nearly 40% of young adults under 30 rely on influencers to stay updated on current events and politics. This is according to the Pew Research Center. Opening its press conferences to non-traditional news sources allows influencers to directly question administration officials.
Yeah, it's really kind of interesting, these development. Emily Ward and Jess Hunishin are the co-founders of the Influencer Talent Management and Brand Partnerships Agency. It is called Shine Ventures. Emily joining us from Toronto. Jess joins us from LA. Great to be talking with both of you again. Before we get going, though, Jess, I do want to reach out to you. You're in LA. We spent several weeks continue to cover the fires. How are you? I hope you were okay, those around you, your community.
Yeah, so I'm just in West Hollywood, so no immediate damage here, but it certainly is true what they say, that everyone knows someone who was very, very personally affected. So we have a lot of those people kind of just like in our Shine network, in my personal network, and yeah, it's been a tough start to the year here, that's for sure. But I think the best thing that can ever come out of this is, it shows how much community can come together in a time of crisis. So yeah.
Yeah, it is nice to see all the rallying. And you're so right about so much coming at everybody across the nation. We obviously have been following so much coming out of D.C., and we kind of want to start there. Tim was mentioning about social media influencers becoming a primary source of news for so many Americans, and how the White House press room has opened it up to non-traditional news sources. What does that mean from your perspective? You guys understand the influencer community and economy. Emily, let me start with you in terms of what that means coming from the White House, and just how influential they are on maybe softer topics, but also more important topics as well.
I think it's incredibly interesting, and it reminds me of 10 years ago when we started Shine Talent Group out of Canada. And at that time, there was really a big shift within the media marketplace. A lot of lifestyle publications had shut down, and PR agencies were looking for other sources to kind of get the news out. So they started to lean on bloggers who weren't, hired by media houses, and everybody had to figure out this exchange of how these people be compensated for their time. But it reminds me of that moment, because at that time, bloggers started to be taken very seriously in terms of how they could be communicating to consumers. And where they used to be more of like a B-list kind of invite to PR events, brand events, they started to become quite primary at that time. So it's very similar.
Do you just advise your clients to stay away from politics, not weigh in on these issues, or do you tell them to be themselves?
Definitely don't advise to stay away from it. I think it's really important for influencers and brands alike to kind of show, like, this is what my morals are, this is what I'm aligned with, this is potentially who I'm voting for. We saw a lot of that around the election, and we certainly didn't ask our talent to shy away from it.
I got to tell you, I'm surprised just to hear that about brands, because it seems like we saw a lot of that back in 2020, and now they want nothing to do with politics because of so much pushback.
Yeah, I think there's been a bit of a mixed result on that. I've seen a lot of brands that I see online who have, kind of made their stances very well known, and what they believe in and what they support, especially when it comes to, maybe it's not party specific, but it is very strong on certain subject matter, which, climate change, reproductive rights, things like that brands are like, this is where we stand, and we're not going to shy away from that.
One of the things we want to ask too is, you guys have been, expanding, and you acquired Spark Talent Group, and so you have some great vantage point in terms of what you are seeing in terms of the influencers and the growth of it. So let me maybe ask both of you, and just let me start with you. I mean, what is it that's going on? How much growth are you seeing, and more people come into the influencer space? And how is it evolving? It's not new, right? It's now been around for a little while, but how is it evolving as kind of something that either, works for a company or a mission or so on?
Well, I think, we're seeing just more and more brands lean heavily and kind of expand their marketing budget to have influencer marketing be a larger piece of the pie. We keep hearing that this is going to be a $500 billion dollar industry by, I think it's the end of next year, which is wild. I feel like this industry kind of had a very grassroots movement about it. So it's very cool to see how much it's grown.
Emily, come on in on it too, in your perspective, as you guys have been in it, now for several years. You said you started your firm 10 years ago. How influencers as, a medium, is evolving and growing.
Well, what I think is standing true, like for me right now, is the fact that it doesn't seem to be platform specific. And that kind of brings up, the conversation around the TikTok ban and what kind of impact that was going to be having, like, on the industry as a whole. And where I think back, 10 years ago, 5 years ago, it was very reliant on certain platforms that existed. And I feel like now, like, the influencers, the creators themselves have diversified across, like, multiple platforms we've seen, the ones who have invested in this in terms of, a career. And it doesn't matter so much in terms of what platform it is, that they have this followership that would move along with them. So that's a really big change.
So a ban of TikTok then, Emily, wouldn't necessarily be, the end for these influencers? They'll just move to a different platform?
It certainly would cause impact. It's not to say that it wouldn't have any impact, but I think the truth is that there would be another platform that either pops up or content would go back to another primary platform. So in terms of advice that we gave our talent during this time was to make sure that they were diversifying, like, their content amongst many platforms, that they had both social platforms and owned platforms as well, like newsletters, their own websites that they could invest time in, distribution in. And like we saw with the rise of TikTok, like over COVID, when a new platform comes out and it catches speed, the consumers, move there, the talent move there, and then the brands move there as well.
Jess, speaking of brands, are brands still getting an ROI on paying influencers?
Oh my gosh, there's no question that they are. And I think the only the only proof point you need to look towards that is that they just keep coming back, right? They keep coming back to this as a marketing tactic. We've only seen growth across the categories. So yeah, and it's, we have the availability of just so much data now, which is, I feel like sometimes a blessing and a curse, but it means that for every single piece of content, we're able to see exactly how many link clicks, exactly how many purchases were potentially made there. So yeah, I think brands are absolutely seeing an ROI. And if they're not, it's still like any marketing initiative. It is a trial and error. And sometimes, maybe that's not the right talent. Maybe the messaging wasn't perfectly aligned and you need to kind of switch it up and keep trying different ideas. But yeah, we're definitely seeing brands return because they are getting such good ROI.
When it comes to influencers, is there a certain, though, part of the pack that is growing more, Emily? Beauty is a big thing. We all see it, certainly online. I feel like baking, cooking, like that's a big one. Exercise is a big one. But I am curious in terms of new folks coming, that like the talent group that you just acquired, was there specialties? Tell us a little bit about it.
In terms of the roster that we just acquired from Spark, it was very much like in the lifestyle space. So, we have beauty creators, lifestyle creators, or as a baking creator as well. In terms of concentration of where we're seeing more brand interest right now, there seems to be a bit of a spike coming from more like experts in their field. So maybe like a registered nutritionist or somebody who has like credentials beyond just like their community as well, which is quite interesting.
So as far as prices go, Jess, there's this idea that, the influencer community, the barrier to entry is not huge. All you need is a smartphone and a following. And I'm not by any means saying that's an easy thing to do, but truly anybody can do it.
Tim wants to know, can he be an influencer?
Well, no, you're making a good point. No. Kids, I mean, you look at survey after survey, I don't know if it's still like this, but in previous years, it's like kids, they just want to be influencers.
Yeah, totally.
I mean,
oh yeah.
Is it saturated?
I don't think it ever will be saturated because audiences can be fickle. You know what I mean? Like they'll happily kind of blow with the wind to the next person that they find interesting. We see a lot of that on TikTok, as we kind of just spoke about, with different kind of demographics and different subsets of people having a rise there. I really love seeing, I think we're seeing a huge rise in like an older female demo, and especially as these are people who have grown up with like so much of their life has been online, and now they're getting to different like life stages. Maybe they're hitting menopause where this was like not talked about before.
Yeah.
People want to have these conversations online, which I think is amazing. It takes these subjects away from being scary and shameful and taboo, and I think that's really interesting to watch. So I think sorry, go on.
No, I was gonna say, I just, was reading a story that Bloomberg Business Week did about life coaching, and like that has gone from kind of bigger, broader strokes to very specific things like, should I not have kids? How do I get my mojo back? Like all these very, very niche things. Just real quickly, Emily and Jess, or Emily, let me throw this to you. Just got about 20, 30 seconds. I know everybody's gonna want it, like we're gonna get off air and like, did you ask them? So how much does an average influencer actually make? And only got about 30 seconds. I know there's a range, but I know people want to know.
What I can say is that there's some people who have made this their full-time career, and there's other people part-time. So I think that can give you like a range. And then there's people who have reached like that stardom with it as well, who are quite like aspirational.
Tim wants numbers.
I just want to know dollar figures. Give me some numbers here. Come on.
Don't we all?
It's reasonable to say that you can make upwards of $1 million doing this. Like, that's not a crazy thing in this industry. So I'll leave you with that one.
Okay. Listen, it's like those YouTubers, the sailing videos that I always talk about. Those guys have lots of followers.
Hey,
they're making money.
You're one of those followers.
Yeah, I am one of those followers. All right, Emily Ward, thank you so much. And Jess Hunishin, co-founders of Shine Ventures, joining us. That's going to do it for Tim and me. It's Friday's Eve, folks. Do not go anywhere, though. Balance of Power starts right now.